your strategy?
It is. We had 5 last year. We expect to have 8 this year, which will be the highest we've ever had. Our hope would be at some stage to get to 16 games in the next few years. We think we could do that. I think it's an indication of the popularity of our game. Every time we take our game to a new market, Brazil's a great example of it, the fans go crazy for it. They sold out the tickets in less than 90 minutes. People had a wonderful time. It was the talk of the town. And I think it will be the basis and the sort of the match that lights the excitement and the popularity of the game in that market, as well as what we're doing around the world. So we're very excited by it. It's just one element of that strategy. You need to have television. You need to have activity and participation in the sport, and flag football is a big part of that. So all of those factors, I think, are going to be what we think will be a very successful formula to be a global sport.
Do you ever envision having a team that's based overseas in Mexico City or in London?
Listen, we've talked an awful lot about it, and I think there are markets that could, without question, support an NFL franchise.
Welcome back to the circuit. This time, we're taking you to the frontier.
Where is the camera? Or do we? You don't want to lose you, Emily, in all of this.
Stargate. Put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure bill in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
A little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
We got a blowout jobs number. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, a surprise report. The U.S. added a whopping 147,000 jobs last month, which was well above the estimates. Meanwhile, on Capitol Hill, a final vote could come this morning on President Trump's big, beautiful bill. And on the trade front, bargaining chips. The U.S. lifts export curbs on China for semiconductor design software. Katie, what are you watching?
A lot to keep an eye on this morning, including on Datadog. AI stocks and chip designers poised to benefit from the news. Now, that marks a shift in the U.S.'s approach to export controls. You can see various chip stocks really rising right now, and I was a little bit early, but I am excited to talk about Datadog.
Yeah, well, let's talk about it right now. Datadog will replace Juniper Networks in the S&P 500 on July 9th, that fateful day, as Hewlett-Packard position on Juniper. You can see, as a result, Datadog shares are rising more than 10%. Katie?
We'll dig into that, but let's get back to the story of the morning, and that is that jobs number coming in hot, blowing past forecasts. Let's break down the data with Michael McKee. He is our international economics and policy correspondent. So, Mike, 147,000. The estimate was for 106,000. Where exactly did all this surprise strength come from?
Aha. I'm glad you asked. As BlackRock's Jeffrey Rosenberg said, it is not the headline number that we care about. It is the private sector payrolls. I'll get to that in a second. Let's just run through the numbers. 147,000, as we said. Unemployment rate falls to 4.1%. That's what everybody's trading on. Average hourly earnings come in a little weak. Jobless claims for last week do fall a little bit, and continuing claims, no change at all. So basically kind of tells you it's a status quo labor market, except for this. What Mr. Rosenberg is pointing out is that government employment was up by 73,000 during the month, so half of what we got. And that was mostly state and local, and a lot of that in education. Private payrolls up just 74,000 during the month. The labor force fell by 130,000, which is the reason that we saw the decline in the unemployment rate. The foreign-born labor force falls for the third month in a row, 134,000 fewer people than last month. And maybe that is due to the immigration enforcement. Healthcare and social workers, your biggest job category besides the government workers, as always, up 58,000. So it is a story in two parts.
All right. Well, it looks good, certainly, to markets. Michael McKee, thanks very much for that. We welcome now our Bloomberg TV and radio audience, or we are going to welcome them in just a moment to talk to Stephen Myron, because this report really was better than any of the estimates that I saw, and certainly any on our team.
And you can see that surprise in the market reaction, futures flying, yields flying, as well as traders sort of reprice those July rate cut expectations.
Absolutely. We now welcome our Bloomberg TV and radio audience worldwide. I'm Matt Miller alongside Katie Greifeld, and joining us first on Bloomberg to discuss this jobs report and the U.S. economy, as well as the big, beautiful bill, is White House Council of Economic Advisors Chairman Stephen Myron. Stephen, great to get you on the program this morning, especially when we see such a positive jobs report, 147,000 jobs and a lower unemployment level. What is this? What is driving this?
Good morning. Thanks for having me. Look, as you said a moment ago, this report was better than 78 out of the 79 forecasts that came into the Bloomberg consensus, right, into the Bloomberg forecast. And so what we see is an economy that continues to defy expectations, continues to defy, all the doom and gloom that's out there, whether it's about the border or immigration or tariffs. This labor market continues to power ahead. And something else that you guys mentioned, that Mr. McKee mentioned about the foreign-born labor force, I think there were tons of predictions that there'd be a disaster in the labor market because of the border policies, and nothing could be further from the truth. The economy continues to create jobs, and if you look at the details of the jobs, all of the job gains since the president took office are due to native-born Americans, and there's actually been a decline in foreign-born workers, which means that all of the benefits of the expanding economy are accruing to Americans instead of migrants.
Stephen, I do want to talk a little bit about what this means for the Federal Reserve. We know the position of the administration is that Jerome Powell and the Federal Reserve should lower rates here, but you take a look at the numbers we got this morning, that headline blowout print, the fact that the unemployment rate is now 4.1%. What would be the case to lower interest rates here?
Well, that's a great question. I want to be clear up front that the Council of Economic Advisors does not tell the Fed what to do on interest rates. But nevertheless, I talk about the economy. And, to me, it looks like an economy that's normalizing. This is a normalized pace of job creation, a normalized labor market. And the inflation rate has been running at a 1.5% rate since, the headline CPI has been running at a 1.5% rate since the president took office. So that's an economy that's normalized and is sort of maybe even running a little bit below where the Fed would normally think about inflation ideally settling. And so I think it's only a matter of time until interest rates normalize as well. Now, I want to be clear, I'm not telling the Fed what to do, but, I would just make that as a prediction.
Well, but we still have 3% inflation, right? Average hourly earnings were up 3.7%. And the president has asked the Fed not just to cut rates, but to cut them by 3 full basis points. In what world is that a good idea?
Well, it's an idea. It's a good idea in a world in which the economy is normalized, and policy will eventually catch up and normalize as well. And as I said a moment ago, inflation has been running at a very subdued pace since the president took office. It's been running at 1.5%. And I also want to emphasize that the president's suite of supply-side policies, through providing tax incentives for investing and building out the capital stock, deregulation, cutting red tape so that businesses can produce more with the same amount of resources, energy abundance, bringing gas prices down to the lowest price at the pump since 2021. These are all profoundly disinflationary. When you push out supply, you get lower price pressures. And so it makes complete sense to expect inflation to continue to normalize, to continue to run at a reasonable pace. Because if this is the opposite of what the previous administration did, where they stimulated demand into a rigid supply side. Instead, we're expanding the supply side, and that's going to reduce price pressures.
But I just want to follow up here, Stephen, because you got your Ph.D. at Harvard under Marty Feldstein, which is a very good school. Can you imagine if the Fed cut 3 full percentage points? I mean, that either causes an overheating in the economy or chaos in the bond market.
Well, I think it depends. It depends where neutral rates are and how restrictive policy is. And as I said before, there's accumulating evidence that the economy is normalized. So, I think it's only a matter of time until interest rates follow. And as I also said, I think that, it's important to think of inflation as being not purely a monetary phenomenon. That's a bit of a fallacy. Fiscal policy plays an enormous role. And if fiscal policy, if government regulatory policy can push out supply, that brings downward pressure on prices. If you don't have enough goods and services and you make it easier to produce more goods and services, you get more goods and services and therefore lower price pressures. It's basic economics, supply and demand. And if you push out supply, there's less price pressure.
Stephen, I do want to get back to the details of this jobs report, but before we do, it seems like what you're arguing is basically that the Federal Reserve, and not that you're telling them what to do, but it seems like your argument is that they should normalize interest rates, get back to neutral, which does seem different than what we're hearing from the president himself, that they should not just ease policy, but ease it very aggressively.
Yeah, I mean, look, I think that there's a strong argument for the things that I just mentioned about policy normalization. And I think there's also a strong argument that the Fed has had a mixed track record in recent times of properly understanding the effects of fiscal policy. I mean, the president was right in 2021 when he said that fiscal policy was on a disastrous track and it was going to create massive inflation. And the Fed caught up to his view, which turned out to be correct, but it took them a while and arguably they were too late. And I think, again, the Fed is overly fixated on tariffs. There's zero evidence thus far that tariffs are leading to any macroeconomically significant inflation at all. You've got the Amazon, one of the Amazon CEOs coming recently and saying that inflation is not really showing up in their sales. You've got, evidence from high frequency prices in some of the research by my former grad school classmate Alberto Carvalho and others, showing that there's really only noise in terms of inflation of imported goods. And so there's just no evidence. And if you go back to 2018, 2019, same thing. We ran this experiment already. We have historical evidence. There was no material macroeconomically significant inflation. And yet the Fed is fixated on what's ultimately a small change in policy, a 10% tariff, whereas the other macroeconomic consequences of the other policies, deregulation, tax incentives for investment, these are going to be massively disinflationary, and I don't think that there's really a necessarily great understanding of the effects of fiscal policy on inflation, nor on growth. And this is why everyone gets the growth forecast wrong over and over and over again about the effects of taxes on growth and revenue.
I'm glad you brought us there and you did your dissertation on that, households reacting to federal tax policy. In terms of tariffs, we've been talking about this. We're all positively surprised. Companies have had huge margins and they're able to absorb, it looks like, some of that into them so far. In terms of growth, when we cut $4.5 trillion in taxes over 10 years, but then only reduce spending by $1.2 trillion, isn't that a red flag? I mean, historically, you look at the Reagan tax cuts, we saw exploding debt and deficit from that. You look at the Bush tax cuts, we saw an extra $6 trillion in deficits after those. You look at the 2017 TCJA, we have seen another $1.8 trillion added to the deficit. I mean, can you point to a time in the U.S. history when when cutting taxes but not meeting those cuts with requisite spending cuts has resulted in the kind of growth that you're forecasting, 4 to 5% of a dynamic growth boost?
So that growth boost is over a 4-year period, and so if you divide it by 4, it's about a percent over that. It's about a percent over that period. But I think that we've got plenty of good evidence, right? So first of all, our forecasts are that we'll get in the neighborhood of 2.8%, close to 3% growth over the next 10 years as a result of the full suite of the president's policies. But that's exactly what the growth rate was in the first term until COVID. The GDP growth in the president's first term from 2017 to 2019 was 2.8% annualized over that period. And I don't think anyone thinks that we can blame COVID on the Tax Cuts and Jobs Act. But it gets better when you look through the pandemic disruptions. There was no discernible decline in revenues as a result of the Tax Cuts and Jobs Act. Revenues as a share of GDP was 17.1% before the Tax Cuts and Jobs Act, and it was 17.1% last year. Corporate revenues went from 1.6% to 1.9%. So the corporate rate was cut enormously. There were huge incentives for investment. There were, reductions in statutory and effective rates, and yet corporate revenue increased as a share of the economy. And this is exactly the type of activity that you want to see when you think that tax cuts, when you think that deregulation, when you think that energy abundance, when you think that all of these things are going to boost economic growth, and that brings in more revenue.
Well, Stephen, I hope to continue this conversation with you soon. Really appreciate your time this morning. That is White House Council of Economic Advisors Chairman Stephen Myron on that blowout jobs print that we got for June. Now let's get to Capitol Hill as the House nears a final vote on President Trump's tax bill. Bloomberg.
Hello, my name is DrPaulCottrell, and we are live streaming on Rumble, YouTube, and on my website, the-studio-reykjavik.com. Help support the work that I do by making sure you subscribe to all the channels. I have 4 channels on YouTube, Brighteon, Bitchute, and Rumble. All the links are in the description of this video and all my videos. Please share the links, ask your social media to follow me. I greatly appreciate it. If you'd like to help support my work, there are many ways to do it. Sharing the links. You could donate on my website, the-studio-reykjavik.com through Stripe, PayPal, or Buy Me a Coffee. You can also be a paid member to my Patreon channel. I do these videos for free. It's through the patronage via donations and the purchasing of my products that allows me to do these videos for free for you guys. So please help support the work that I do. Now, if you'd like to take a look at the different products that I have, make sure that you go to my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos. I have ebooks. I also have course material on pulmonology and immunology that you can learn from. And I have great, very high quality supplements that I use. I've designed this protocol that helps to slow down the aging process and helps to boost up that immune system. And you can target different systems in your body, such as cardiovascular, such as pancreatic, neural, so that you can target multiple systems, right? If you pay attention to what I'm saying, you're going to be able to improve your health and wellness. Please go to my store and get the great products that I offer. These are products that I use every day. To improve your cardiovascular health, it's very important to take omega-3. Omega-3 helps to reduce the clotting, overclotting of the red blood cells. So omega-3 prevents those red blood cells from sticking too much. In addition, omega-3 helps to bring down LDL levels and increase your HDL levels. That's really important because you have less LDL that's oxidized, you have less plaque buildup. Super important. And omega-3 helps to bring down systemic inflammation. So take omega-3 every day to improve your cardiovascular health. And part of an anti-aging protocol is to make sure that you have good sleep and you're getting into those REM cycles and deep sleep cycles. You need about 3 to 5 of them so you can detoxify your central nervous system, be well rested when you wake up, but also to consolidate memory. People that are sleep deprived chronically, you will have memory loss. So what you need to do is get good sleep. Now you can take my Good Night formula, take it every night. It is tryptophan, melatonin, GABA, and passion flower. You will get into those 3 to 5 cycles of REM sleep and deep sleep that you need to be well rested, detoxify your body, and consolidate memory. Super important. Getting regular sleep every night is part of slowing down the aging process. Get not enough sleep chronically, you're going to actually see these types of individuals aging faster. They age faster, they have higher cortisol levels. That's immunosuppressive, so your immune system is not working as well. Poor sleep also affects your gut biome. So there lots of your systems are affected by chronic sleep deprivation. So please go to my store, the-studio-reykjavik.com, and get the Good Night formula and stack it with the omega-3. So you're helping with your cardiovascular health and you're helping to consolidate memory and you're detoxifying your central nervous system. So please go to my store, get the omega-3 and the Good Night formula. Use discount 5, you get $5 off any order. If you spend $150 or more, you get a free gift until supplies last.
Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the hardest? All right, while they're still on their commercial break, please go to my store and get the magnesium and zinc. Magnesium and zinc is a dual purpose supplement. Magnesium is going to help improve your brain function. Magnesium also increases the efficacy of vitamin D3. And magnesium and zinc helps to boost up your immune system. So get these supplements that are dual purpose so you get more bang for your buck. So please go to my store, get the magnesium and zinc, take it every day. Drink it with filtered water. If you're not feeling well, take a double dose of it. 1 dose in the morning and another one in the evening. And if you're feeling better, then go back to your maintenance dose of once a day.
Good ones have to be left behind.
Chief Future Officer, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Well, the Trump administration is lifting requirements for chip design software sales in China. This move will allow companies like Synopsys and Cadence Design Systems to resume business in the country. And as such, you can see that both stocks jumping pre-market. Joining us now with more is Bloomberg Tech co-host Ed Ludlow. And Ed, we know a lot of these chip companies have been caught firmly in the middle of these trade negotiations between the U.S. and between China. Looks like we're getting a little bit of relief this morning.
That's exactly right. The original restriction on EDA, electronic design automation software, kind of came in the tit for tat in May, where there was a concern about rare earths on the China side. It was kind of like the last remaining tool in the chip restrictions bucket. So we know that Siemens, for example, has already started doing business again in China. Cadence and Synopsys are now going to start working towards that. The software is important, right? Like the cutting edge chip of today has billions of transistors and the human brain just simply cannot design it. So the context you need to know is that there is some concern that allowing this the Chinese access to these software platforms gives them some kind of ability to claw back the ground that they've lost in America pulling ahead in chip design. But in reality, this was kind of more of a political bargaining chip. Both in London and the Geneva talks that took place in prior months.
What about the big question, Ed, of selling into
today? Solana rises after the launch of the first
Chinese market. Are we going to see that barrier lifted?
So I think the latest thinking for the administration, and again, this is based on my conversation with sources, David Sachs came on the show the other day, is that the export controls as they stand now are going to work, right? The backdoor concern was that allowing the Gulf states, in particular the United Arab Emirates and Saudi, access to lead-edge chips might be some kind of backdoor access for China. But as it stands, that there isn't sort of any evidence that that's the case necessarily. We haven't replaced the diffusion rule, and there isn't any sort of codified plan of action as it stands yet, specifically to restrict in a new way, new rules, new parameters for China. And whether NVIDIA in particular, because they have a monopoly in this market for AI accelerators, comes up with some kind of new chip for China, we do not know yet. There are rumblings that they're working on it.
All right, Ed, I know you'll be all over this at 11 a.m. You can catch him there. That is Bloomberg Tech co-host Ed Ludlow. Let's take a look at some other movers on our radar this morning. I'm keeping a close eye on Datadog, which is replacing Juniper in the S&P 500. Juniper is being acquired. That's also to the disappointment of Robinhood investors. I'm
going to go to CNBC and listen to the non-farm payroll report that they did.
I mean, in Chicago, I don't know what you think about July possibly being a live meeting based on these numbers, but sub 50 in terms of additions seems to be the number that could make it live in the markets.
Anything's possible. We'll know shortly. Obviously, it's the big June jobs report. I wouldn't look for this to make an easy more likely. 147,000 jobs. Definitely a bit better than expected, no matter what your range was, whether it was closer to 100 or 115,000. It's a pretty good number. And guess what? If we look at the 2-month revision, it's positive. It's up 16,000. How does 147 stack up? Well, it's pretty odd because it's exactly where we were in April, unless they revise that. To find a higher number than that, well, you're going back to last year. So this is tied for the, second best, tied for the first best number of job creation of the year. Now, let's look at the numbers for unemployment rate. That number is coming in at, well, it's coming in at, where is it to underemployment? There it is, 4.1%. Sorry, folks, we do this on the fly. 4.1%, and obviously 4.1 equals where we were in February to find a lower unemployment rate the beginning of the year when it was at 4%. Now, if we look at average hourly earnings, up 0.2, we're looking for up 0.3, and the rearview mirror is up 0.4. Up 0.2 equals where we were in April. To find a lower number, you really have to go back in the Wayback Machine. You're going all the way back to August of 23 when it was up 1.10. So earnings are something to pay attention to. And you see the same dynamic when you look at year over year average hourly earnings. 3.9 in the rearview mirror, 3.8 expected. Boy, 3.7. How does that stack up? That would be the lowest yearly rate going back to July of just last year when it was 3.6. Now, if we look at the average weekly hours worked, 34.2, that equals where we were in February. We started out the year at 34.1. The underemployment rate. So U3 is the actual unemployment rate that we pointed out. The U6 is the underemployment rate. We like to pay attention to that. Obviously, it's been coming down rather dramatically. That now stands at 7.7%. That follows 7.8%. And that would be the number that we're very close to expectations. Finally, labor force participation, always important. We want to bring back people in the workforce. And this time we did not. 62.3. We lost a 10. 62.3. And what's very fascinating about this is these numbers have been pretty steady. 62.3 equals Dees of 22, 62.1 year in Nova of 22. Listen, it doesn't end there. This is Thursday. Initial jobless claims coming out at 233,000. That is a drop of 4,000 to a slightly revised 237,000. Still keeps that pretty darn good. Just like Joel's, not a bad number for the labor market. ADP seems to be an outlier at this point. And finally, continuing claims coming at 1,964,000. That means it's what, 6 consecutive readings over 1.9, basically comping to 2021. And the trade balance for May, which is obviously a deficit at minus 71.5 billion. And the rearview mirror, 60.3 billion. Boy, has that come down with all the trade issues. Just think, March was 138 billion, by far the biggest deficit since record keeping in 92. Now, after all that, what happened? Well, all you needed to see was that 147,000 in positive 2-month revision. Yield shot up like a bit of a rocket ship. 435 in a 10, we settled at 428. In a 2-year, 380, that's up 11 on the day. And both of those metrics were down 2 basis points before the number. Pre-opening Dow futures more than doubled from up a little less than 50 to now up 115. It should be no surprise that these are good numbers. And Melissa Lee, you were asking, would I think that this is going to make a big difference, put July hot? I think what this does is make everyone question the dynamics of what issues are going on in the economy that would need an ease. I understand the president's view. I understand Jay Powell's view. But in the end, it certainly seems as though it's just about right now, considering what's going on with the risk on, risk off in the equity trade. Back to you.
Exactly. See, with that good jobs number, there is no way that the Federal Reserve needs to lower rates. Now, again, for the ones that haven't heard, my opinion on this, when inflation is above the 2% target and jobs are steady, at this moment we have an unemployment rate of 4.1%. When I was in school, the natural unemployment rate was 5. So anything above 5 was contractionary and anything below was expansionary. So 4.1% is a very low unemployment rate. All right. Now you have to dive into the details of like which sectors are hiring, which sectors are laying people off. So there's granularity in the data, but overall, the job market is good in terms of statistical data. So if you have a low unemployment rate and you have above inflation, you can't lower rates because that would be inflationary. Now, Trump wants to lower rates to just change, bring down the yield curve. Well, you may bring down the yield curve by lowering rates, but then it will creep back up because of the inflationary pressures that it creates. So you don't get what you really need. Now, if inflation was at 2% or below, preferably below, and unemployment was ticking above 5%, then you would want to lower rates. Now, what if unemployment is at 4.1 and you're at 2% inflation? You don't do anything. You just leave it. You leave the rate as is. Now, what happens if the unemployment rate was at 4.1, all right, and you had some sort of disinflationary situation that's going on in the economy, which would be kind of a rare, that would be kind of rare to see. All right, so you have below 2% for inflation and you have a low unemployment rate. What would the Federal Reserve do? In that case, if that was only one data point showing that, they would have to wait. Now, if there was 2 or 3 data points showing low unemployment, below 5%, and having less than 2% inflation, so it's there is some sort of deflationary thing that's going on, what should the Federal Reserve do? If the banking industry is stable, then they should not cut. If the banking industry is not stable, then they should cut. So it's not so simple as we'll just lower the rate so we can, borrow money cheaper. It's way more complicated than that. But the metrics to decide your decision tree is based on unemployment and inflation and the transmission mechanism between the Federal Reserve, the banking industry, and the overall economy and how they're borrowing and paying their debts. That's it. That you don't need anything more than that. So based on the information that came out, where jobs are stable, there's no way that the Federal Reserve is going to lower rates anytime soon. Okay, now with that said, markets are going to open up very shortly here. The futures market for the S&P 500 is at 6,297. And okay, markets just opened here. Okay, so the S&P 500 now is at 6,251. VIX is at 16.21. Euro is at 1.17. Oil is trading at 67.11. BITO is trading at 21.11. And the Japanese yen is trading at 144.8. Natural gas is trading at 3.517. Now, with the S&P 500, right now the S&P 500 should have a resistance level at the 6,250 mark. So we're right at that level. We'll see if it bounces off. Now, if the tax cut goes through, passes, then it'll probably surpass that resistance point, and we'll have a new resistance point at 6,350. And then a support level at 6,250 and another support level at 6,000. So we have to wait to see what we will close at for today and what goes on with the tax bill. Will it get passed in the House? So again, the S&P 500 is at 6,253. My target for the year for the S&P 500 is 6,800 by year end, or over 7,000. And the probability of it being at 6,800 is probably around 65%. And for it to be at 7,000 or higher, then you're talking about 40% chance. All right, let's listen into Bloomberg here.
So policy going from an acute to a chronic issue for markets. And most importantly, moving on to what we were focused on before. So the long-term themes, AI being one of them, higher defense spending, deregulation, benefiting the financial sector. So it's really back to business as usual. It's still a resilient market, but not an unchanged market beneath the surface.
Yeah, it's interesting to hear you say that, these sort of long-term policy issues, very idiosyncratic. We were talking about the insurers yesterday, for example. It feels like
Centene.
Centene, never forget it. It feels like renewables are just a hot potato. And given those sorts of headwinds that you're encountering on a stock-by-stock, industry-by-industry basis, where do you have high conviction right now? Where is insulated from that type of noise?
So it's hard to say it's a country overall or a sector overall. But I think some themes we can tease out. It's large cap over small cap. So you still have pretty soggy economic growth. You still have elevated rates, and you still have input costs going up through tariffs. That's still an environment where we feel a lot more comfortable with large caps leading and small caps still underperforming, like it has been the case this year and for a few years. Besides that, I think leaning into areas of the market where there are other supportive tailwinds to really propel revenue growth, earnings growth. And I think this is where the AI theme really comes back. And really the new winners from AI, right? Let's abandon that holistic Mag 7 concept. Let's think about who are the new winners, the adopters who are monetizing it, and the digital and physical infrastructure winners. I also think we can look to other regions where valuations are already pretty discounted and where things are getting incrementally less bad. So that really leads us to Europe, to Japan, to India as another example. So those are areas where I think policy is a bit less top of mind.
I want to marinate on small caps for a little bit, because not that I'm pushing a narrative, but when we started this show about a year ago, I really bought into a lot of the bullish cases we were hearing on small caps. You have this valuation disconnect. These companies are more domestically focused than maybe some of those large caps. Just felt like the stars were aligning for the little guys. Turns out it was another false dawn. Why can't these small companies get off the ground?
I think if you think about when small caps work, it's when economic growth is re-accelerating, which we never expected for this year, so we were not on the small cap train. You need slightly lower rates because they're very financed by bank loans, floating rate. Also not the case, and modest rate cuts is what we expect. And then you also need a high amount of risk appetite, since a very high share of these companies are unprofitable.
Got to be brave.
So it's not quite there at the moment, despite the valuation signal having been there for a while. A way we think about investing then in smaller companies with high growth potential is much more in private markets. So looking at VC, private equity, private credit, and companies are staying private for longer. So that's really more and more the market to look for that opportunity.
Gabriella, I keep going back to the IN page, the Bloomberg Index browser on the terminal, with it, which is exceptionally boring, right? I mean, if we show a picture of it, you'll see just how boring it is. But the year-to-date return column is amazing, right? For fixed income. And you've called the first half, I think, revenge of diversification, right? Does this trade have legs? Do we continue to see this as a good buy?
Yeah, the movie of the first half of the year came out. It would be called The Revenge of Diversification.
Yes.
Especially in the first quarter, if you looked at the scoreboard, only core fixed income was positive. Because then it was much more a risk aversion, concerns about recession risk rising. So bonds really showing why they're there in the first place.
But high yield.
High yield, really there because of really the carry, right? The super attractive all-in yield of over 7%. We still think that's interesting as we settle into higher rates and lower spreads. And then also diversification by style and region.
Yeah, EM has been crushing it.
EM, developed ex-US, and not all driven by the currency, although that's been a huge story, currency diversification with the dollar down 11%, but also some incremental, less bad, you could even call it positive changes in a place like Europe. So I
What about the dollar, though, Gabby? I mean, does that continue? We've seen a 10% drop from the high, and it's been a pretty sharp drop over the past few months. But if you back out and look at, a 25-year picture of the dollar, we're still in a relatively strong place.
That's why I think this is still a drop in the bucket of this rebalancing in currencies and global equity markets because things had gotten so stretched in the direction of the U.S. So this is where I'm not a buyer of the end of U.S. exceptionalism. I think it's just a normalization of U.S. exceptionalism after a very abnormal time period. And if the dollar is a great place to look.
Here's a 30-year chart, by the way, so you can see, my point.
Yeah, exactly. It's been 15 years of solid dollar appreciation. It's a drop in the bucket so far, what we've seen this year, a lot more room to go. And if you stretch it back even further, you would see that these things come in cycles. Before the financial crisis, we had nearly a 10-year period of dollar weakness. Dollar was still the reserve currency. It was just getting less expensive or more in line with fundamentals.
Oh, you ask and we deliver.
40-year
chart of the dollar.
There you go.
All right, Gabby, that's a good place to leave it. It's always great to see you. That is JP Morgan's Gabriela Santos. Let's get to this equity market and that fresh record that we're eyeing on the S&P 500. You can see it's coming with pretty good breadth. You have over 370 names in the S&P 500 in positive territory right now, just 120 or so in the red. You take a look at what is leading us there, and it's all the names you would like to see. Amazon, Meta, NVIDIA, Microsoft, Broadcom, really pushing this market higher. Berkshire Hathaway had a rough day yesterday, but it's on the upside right now. Then you look at the downside. There are some tech names in there. I'm looking at Alphabet up there at the top, Home Depot too, but you can pair that to the nearly 400 names that you have in the green, not making too much of a dent. Let's take a look at the sector level as well, because it broadly mirrors what I'm saying right now. More green. Net here, Matt, is that this is a very risk-on day.
Yeah, absolutely. And what an exciting day it is. Not only
early
is
close.
Tomorrow, not early close for sure. You can watch me and Romaine Bostick on television and radio from noon to 2. And to top it all off,
tell me,
chip makers are rallying as the Trump administration lifts export curbs for chip design software sales in China. More on that next. This is Open Interest.
I apologize. There was some weird thing that was going on with the Rumble app, and the video resolution was grainy, and I was trying to fix it. So I apologize for that. Please go to my store, the-studio-reykjavik.com, and get the great supplements that I use to improve my health, my immune system, slow down the aging process. This stuff works. Stack it the way I tell you to, and you're going to increase the efficacy of the anti-aging protocol. So get the vitamin C and magnesium. Vitamin C and magnesium supplement is dual purpose. It's going to help with your skin. It's going to help with your immune system, and it will help with your brain function. Magnesium also increases the efficacy of vitamin D3. So taking this vitamin C and magnesium is super important for your health. So take it every day, drink it with filtered water. Again, it helps with your immune system, your brain function, and your skin. Now, once you turn about age 40, you start to have issues in building muscle and maintaining muscle. It's called atrophy. So when you start to age, your genes start to methylate. And when they start to methylate, certain genes are turned off or less expressed compared to when you were younger. And building muscle is one of them. Taking Myotrol will help with the gene expression that you need to build muscle and to maintain muscle. Do resistance training, take this every day, and you will maintain and build muscle. This is super important for people that are age 40 or older, but also if you are an athlete, younger or older, you'll benefit from Myotrol, especially if you stack it with the Gladiator barley. The Gladiator barley will be the ingredients you need to build the muscle. Myotrol helps with the gene expression. It's polyphenols, flavonoids, and lignans. So please go to my store and get the Myotrol, do the resistance training, and gain the muscle. So a great stack would be take the vitamin C to help with your skin, your brain function, and your immune system, and then do the resistance training and take the Myotrol, and you're building muscle. And when you do that, you're targeting your musculature, you're getting more bone density because you're doing the resistance training. You're going to get better back posture, so you're going to have better blood flow between your lower extremities and your upper extremities. You're going to have better lymph flow, so that's going to help with your immune system. So please go to my store, the-studio-reykjavik.com. It is a holistic approach. When you apply this, you're going to start noticing that you're slowing the aging process. Now, we can learn a lot from aging research, geriatric research, sports medicine. When you couple this together and you listen to your body and you get telemetry from your body through blood work or EKGs or scans, ultrasounds, whatever, and you look at the data, you can target certain systems that you need to target. Like, for example, if you had a blood workup and you have high cholesterol, there's ways to lower the cholesterol naturally. If someone is having an EKG that is showing, early signs of heart disease, well, there are ways to mitigate that problem. Let's say your blood glucose level is high. Well, there's ways to mitigate that problem naturally, through proper supplementation and applying a holistic approach. I'm going to tell you that on how to do it. Now, again, it's very simple, but you have to be diligent. And that is proper diet, proper exercise. You have to do the 4 modalities of exercise. That's resistance training, cardio, stretching, and balancing. All 4 of those modalities are important. If you only do 1 or 2 of them, you're doing it wrong. You need to filter your water. You need to stay away from processed foods. Reduce your sugar intake. Try to have some level of calorie restriction because that can activate certain types of genes that actually help your immune system and slow down the aging process. Proper sleep, mindfulness, bringing down your sympathetic nervous system and bringing up your parasympathetic nervous system. You want to bring down those cortisol levels. So mindfulness or prayer or spirituality, meditation will help. Learning new things, talking to people, staying away from screen time. Just, these mobile devices have made us stupid. And AI on top of it is going to make you even more stupid. Not stupider. If someone says stupider, they've been affected by AI, all right? So the point I'm making is it's a holistic approach and then the proper supplementation. And when you stack these supplements together with that holistic approach, you're going to get added benefits. It's like doing a certain exercise. And if you're doing the exercise wrong, you're not going to build the muscle correctly. But if you do the exercise right, if you have the right technique, your muscle will increase at a much faster rate, or you'll get stronger at a much faster rate. So it's about technique. If you know the technique, you can slow down the aging process. So please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. If you spend $150 or more, you get a free gift until supplies last.
Sell in that region.
Hey, I want to go deeper into AI by asking about Stargate, this partnership that President Trump announced at the White House a few months ago. Oracle has now made a deal with OpenAI, whereas the latter is going to rent an even bigger amount of computing power from the database supplier. 4.5 gigawatts. I think I'm still trying to get my head around how much is how much. What kind of power is that?
Well, so just to put it in context, overall U.S. data center power consumption is around 22 to 24 gigawatts. So we are talking about a pretty sizable, almost a 25% increment to the overall U.S. data center power consumption. But look, right now we are at a point where Anthropic just grew its revenue from $1 billion to a $4 billion run rate over a matter of 6 months. So the revenues are starting to show up for these AI companies. I mean, yesterday we were talking about Microsoft cutting headcount. So the cost savings are also starting to emerge. And that's why, you know, there is so much excitement around this infrastructure build out. I'm sure at some point we'll have some sort of digestion, but right now it looks like everyone is excited about adding more inferencing capacity. I'm still trying to figure out how the scaling laws are going to shake out this year, but clearly there's a lot of inferencing demand and it's showing up in the revenues of these pure play companies.
All right, Mandeep, really appreciate your analysis there. That is Mandeep Singh of Bloomberg Intelligence, where he leads global tech research. Let's kind of check on stocks right now broadly, because we're still mapping the reaction to what we saw this morning at 8:30 this morning. That big blowout jobs print for June, 147,000 jobs added, the unemployment rate dropping to 4.1%. It's hard to find too much to quabble about. You did see manufacturing, that industry, lose jobs, though. Again, shedding about 7,000 there. But you can see the reaction in markets right now. The S&P 500 up 0.5%. The real reaction is in the bond market, though.
Yeah, for sure. We see yields soaring in the bond market. If you take a look at the WB page, I think there we go. The 2-year yield up 9 basis points at 38.75. The 10-year yield up 5.5 at 43.31. I wouldn't quabble on the jobs number.
What verb would you use?
I may quibble with it.
Quibble, quabble.
But what I would say is, while it's a 50% higher number than the whisper number and than the survey, and while no one on our team guessed higher than, I think, 105, right? Joe was the winner with the guess of 105.
I did say once I saw everyone come in sub 100K that maybe it's going to be 145,000, but I was still off. The thing is, coming into this report, there was about a 25% chance that the Fed would cut rates in July. And you saw this massive plunge in the odds when we got the number, because July, we know that Jerome Powell said that he needed more data. He wanted to see this month's data. He has it now, and it's hard to build the case for a rate cut when you take a look at just how robust this labor market was.
Right. The point I was going to make is that we're still not even half of the average over the last 4 years.
Yeah.
And it's a little bit unfair because that includes, of course, just the rebound from COVID and not the drop. But that's 314,000 jobs over the last 4 years on average per month. So this isn't fantastic. It's just better than expected, which is what markets care about.
It's about the direction of travel. I hear what you're saying. Before I tease, which I am going to do, I will say, we were talking with Mike McKee about how you should never trade ADP. This was another example, that ADP print, the line to NFP, it's fuzzy or non-existent.
It's a mantra I will not forget.
Never trade ADP. Coming up, TripAdvisor jumps as activist investor Starboard builds a 9% stake in the travel site. We'll bring you the details next. This is Open Interest.
Please go to my store, the-studio-reykjavik.com, and get this supplement stack to help with your cardiovascular health and your immune system. All right. ashwagandha root will help to bring down your cortisol levels and help to control your blood glucose levels. That's super important to bring down inflammation. And what will happen is by bringing down those cortisol levels, you're reducing the immunosuppressiveness of cortisol. Cortisol at elevated levels chronically will be immunosuppressive. Now, when you have high glucose levels, you're going to do damage to your vascular system. And when you do damage to your vascular system, you start building up plaque, and you start having a lot of other problems like diabetes. Now, you want to control that. You can do that by taking ashwagandha root. Ashwagandha root will help to control the blood glucose levels, bring down those cortisol levels. And when you do that, you're reducing inflammation, you're helping your vascular system, and by bringing down that inflammation, you're helping your immune system. Turmeric is an antioxidant that's going to soak up free radicals and bring down inflammation. So that's going to also help with your vascular system and your immune system. And by soaking up those free radicals at the vascular level, you're reducing the chances of LDL that's oxidized. And when you have less oxidized LDL, you have less plaque buildup. Lignans will help with your immune system and help with your endocrine system. In addition, it's going to bring down that stress. So when you stack it with the turmeric and the ashwagandha, you're bringing down free radicals, you're bringing down stress, you're bringing down the blood glucose levels, right? And when you do that in a holistic fashion with the stack, then you're helping your immune system, helping with your vascular system. You're reducing plaque formation. So it's really important to do this. I mean, this stack right here is targeting two big problems that people have, right? But really three. It's boosting up your immune system, this stack. It's helping your cardiovascular health, so you're reducing plaque formation. And you're also helping to control your blood glucose levels. So it's a three, you're attacking three different issues that people have at the same time. So please go to my store, the-studio-reykjavik.com. Get the ashwagandha, the turmeric, and the lignans. Super, super important. Use discount 5, you get $5 off any order. If you spend $150 or more, you get a free gift until supplies last.
But there are other booking sites like Airbnb, Booking.com.
Stiff competition.
Isn't that a crowded field?
It is a crowded field. Also, if you remember, TripAdvisor actually got spun out of Expedia in 2011. So it used to be a more consolidated space, and now it's gotten a little bit more crowded. What is also interesting is all of these companies are trying to get into the experience space at the same time. So Airbnb has launched their experiences or like themed houses, the same way that TripAdvisor has its own arms doing a similar business. And those actually are some of the biggest growth driver in the company.
Right.
So we're kind of probably just seeing that this transition of travel is becoming more experiential. Younger people are looking for new experiences versus sitting on a beach and going to a nice branded hotel.
I don't know, that sounds kind of nice. But Crystal, we only have about 30 seconds left. We don't know necessarily the details of what Starboard is planning to do, but what is their typical playbook when it comes to these activist situations?
How I look at it is that this is Starboard going back to its core. So,
all right. The S&P 500 is trading at 6,266 with the VIX index at 16.39. All right, so I think we are starting to firmly establish that the 6,250 is no longer resistance level, and it's now going to be a support level, especially if the bill passes in the House. So that will mean that the resistance level for the S&P 500 now is going to be risen up to about 6,350. All right, so just keep that in mind. And now this 6,250 is most likely going to be a support level, not a resistance level. So it's pretty strong. Equities are moving pretty well today. Natural gas, which is the position that I have in right now. I have two positions in natural gas, and that's trading at 3.567 right now. To long natural gas, you want to take a look at Boyle. Boyle's trading at 49.11. If you want to short natural gas, that's called cold. I think natural gas is trading in a range between 3.4 to about 3.7. So right now, you know, it's probably going to continue to go up until it's around 3.7, 3.8. Now, as we get into the fall futures, then it should elevate in price. So that trading range will probably move upward. That window will probably move upward. So there's a decent tick up for natural gas right now. All right, now with oil is trading at 67.20. And I'm not in an oil position right now. I wanted a few days of trading to prove that 65 was not going to break. And so I think with the data that it's showing right now, I think 65 is the low part of the trading range and 68.50 is the upper bound. So I think that's the trading range now. So, you know, if it got into like 68 handle, I'd probably short it. If it came back down to 66 or 65 handle, I'd long it. But I wanted to wait. Sometimes just waiting and watching the price dynamic to emerge is better. And that's what I did. So right now I'm just kind of seeing if it's going to test that upper bound at 68.50, which I think it will. Intraday high, it was about just under 67.6. So yeah, so it's moving. It's, you know, it's about 75% of its range. If you longed it, you would probably make a little bit of money if it went to 68.50. If you shorted, you'd probably have a high, you know, a more probability of making money because I think 65 is probably the lower bound. Okay, with that, let's talk about a couple more items here on the store. Please go to my store and get the digestive enzyme complex. Digestive enzyme complex will help your pancreas. If you're 40 years of age or older, you need to reduce the load on your pancreas. Now you can do that by not eating. That you probably is not going to be good for you. Or you can take supplements and help to digest your food. Digestive enzyme complex will help to break up that protein, carbohydrates, and lipids and allow for you to absorb it with less stress on your GI tract, less stress on your pancreas. Super important. If you're an athlete, younger or older, you'd benefit from digestive enzyme complex also, because it's going to allow you to break up your pre-workout or your post-workout fuel source. Now, digestive enzyme complex also has bromelain in it. Bromelain is a fibrinolytic, so it's going to help to break up clots. And digestive enzyme complex has proteolytic enzymes to help to break up glycoproteins. So please go to my store, the-studio-reykjavik.com, take the digestive enzyme complex, reduce the load on your pancreas, digest those proteins, carbohydrates, and lipids. Super important. Now, I have structural nano silver soaps, very high quality. Get a few bars for your house. So you can get it in lemongrass, charcoal tea tree, and you can also get it in lavender and peppermint. All right. So go to my store and get these very high quality structural nano silver soaps. Get a few bars for your household. Use discount 5. You get $5 off any order. And if you spend $150 or more, you get a free gift till supplies last. All right. Yeah, natural gas right now is trading at 3.568, so it keeps on going up. And the S&P 500 is trading at 6,267. If people paid attention to me when it was at 4,830 or whatever it was, you would have done pretty well. Too bad that a lot of people didn't listen. Okay. want to listen to CNBC here.
One day, you won't have to assemble the entire creative team for every new little request. Are they all wearing hats? Indoors? But before that,
Bring in the rest of our jobs panel, the Brookings Institution's Wendy Edelberg, the Manhattan Institute's Allison Schrager, and our own Mike Santoli. Great to have you all with us. Wendy, let's start off with you. What's your take on the report? What's your take on that asterisk that Steve brings up in terms of the growth from the federal government in terms of job ads?
Yeah, Steve makes a great point to focus on the private sector. The main challenge here, and I think the main challenge for Jay Powell, is what's a good number? And right now, it is completely perplexing to be able to answer that question. And the reason is immigration. It looks like the recent surges in immigration in 2023, 2024 are actually still putting upward pressure on labor supply all these months later, even after it slowed in the second half of 24. And then immigration clearly slowed in the first months of the Trump administration. And yet we have a lot of information that shows us that immigrants who came since, let's say, 2022 are just now working to enter the labor force. And to the degree that they're doing that at speed, it could be that a good number in the first half of this year should have been more like 200,000, which is to say,
all right, breaking news. The ISM services number came in a little bit hotter than expected. Durable goods order rise 16.9% month over month. Estimate was 16.4. It met estimates. Factory orders rise 8.2% month over month. Estimate was 8.2. Non-defense capital goods shipments ex air rise 0.4 month over month. So overall, the economy is still good in the jobs market, and inflation is tame.
The numbers we're seeing now may actually suggest some softness. This is all about what's the break even. And we are just in the grip of when those break even employment report numbers are gonna massively shift. It could be that we shift from a world where actually a good payroll employment number in a given month was 200,000 in the first month of this year. That could be as low as 10 to 40,000 in the second half of this year. We are just in the grip of this change because of the wild swings in immigration.
Allison, do you also believe that we are on the precipice of a major change here in the labor market?
No.
Could be, but I think I feel like we keep looking for the shoe to drop, but we keep getting good reports. It's not just this employment report. It was also JOLTS. It's also inflation. And for right now, the economy looks pretty strong. It's still keeping on, despite all this uncertainty, despite all this tariffs. I guess we can't explain it, but at the very least, I don't see how the Fed could justify cutting rates right now. I mean, not only that, it doesn't even seem the high rates where we are. We're supposed to be still in a high rate environment to finish off inflation. It doesn't seem to be having a contractionary effect on the economy. So it even is sort of suggesting that the neutral rate is much higher than it was pre-pandemic. And it's really hard to justify cutting rates until we actually see evidence of significant weakness. I feel like we keep squinting for third or fourth order derivatives to justify a weakening labor market. And it might be weakening some, but it's hard to call this economy truly unhealthy.
What would be the number that would be truly weak to you? I mean, what's the cutoff point? Because you're right, people are squinting, they're looking, they've been thinking this is going to happen for so long, and they're trying to find any sign of it.
It has to be at 5%.
Well, I mean, as Wendy points out, we might end up with much lower job creation rates, but that might also reflect lower immigration. But that would also mean we still have relatively low unemployment. So if that's the Fed's goal, is keeping unemployment low, even if we do end up with lower employment reports, that doesn't necessarily justify cutting rates. So, I mean, I agree with her that as we had the impact of lower immigration, we're going to see lower reports, and we might have to also adjust our bar for what's a bad report.
If you're a man who makes at least 150 grand a year and you feel self-conscious about your gut sticking out, I'll get you shredded or you
are you going to deal with the $9 trillion that's coming due this year?
We'll just turn it over. Oh, well, let me tell you that we're going to do it this way. We're going to turn it over short term because we have a stupid person at the Fed. If he would lower the rates, but I don't want to have to pay for 10 years debt at a higher rate. And then we're going to get somebody into the Fed who's going to be able to lower the rates. We should be at 1% or 2%.
And that's President Trump with me in my exclusive interview last week on the $9 trillion of debt that rolls over this year.
I understand why Trump is saying that. All right. He wants lower rates, so we service our debt at a lower percentage for the coupon payment. All right. Makes sense. The problem is that when the Federal Reserve does that, they're pumping money into the economy. When you're pumping money into an economy that is slightly at an inflationary situation because it's not at the 2% target or below, if you print more money, it's going to be inflationary, especially when you have unemployment, below the natural unemployment rate. And this is what I've been saying for literally 2 years. The Federal Reserve should have never cut rates when they did during the Biden administration. And when there was inflation, they should have shocked the system by raising rates at a lot faster rate to be able to bring down the prices. So instead, they incrementally did it because they didn't want to perturb the bond market. And therefore, now you have permanent stickiness of price for certain goods and services. But if you shock the system early on, that stickiness of those of price wouldn't have happened. It would have gone down. Those prices would have gone down. But now, because of inflation and a Federal Reserve that was too slow to react and didn't react in the magnitude that they needed to cut inflation back in the Biden administration, we have prices that are sticky. So lowering rates just to lower rates is not a good idea. You need to pay attention to the other variables. And right now is not the time to lower rates. It is not the time to lower rate. Your inflation will get worse, at the household level if the Federal Reserve starts lowering rates under the condition of slightly inflationary pressure right now above the 2% target, and we have unemployment at 4.1%. Federal Reserve should not lower rates. But our government has a revolving debt issue, and the yields are much higher. Well, the answer to that is reduce spending, reduce government spending. That's what the market's telling them to do. The market's signaling through it's an emergent property that the government is spending too much. That means they have to cut. They have to cut certain programs. And what are the three rails of politics? Medicare, Medicaid, and Social Security. That has to be cut. If it doesn't get cut, then we're going to have a down the road in an economy that is not going to be as robust, because we're going to be spending so much on interest. So it's not just a cut. See, if you do it the way Trump wants to do it, by just lowering the rate, if you just lower the rate, yeah, the government is going to issue bonds at a lower rate because the whole yield curve is going to go down. Okay. But what about months later, or a year later, or 2 years later, when your goods and services are much higher now because the Federal Reserve pumped money into the economy and it was too hot? The economy was too hot. What are you going to do then? What are you going to do then? Now your prices are sticky, and then the Federal Reserve, to correct the problem, has to raise the rates. It was better not to lower the rates. So Trump's wrong on this. Trump is right in terms of the debt issuance by the government, but the answer isn't issue more debt at a lower interest rate. The issue is cut the spending. That's what we need to do.
This morning with the Treasury Secretary, Scott Bessent. And Secretary, I want to get your thoughts on that in terms of this $9 trillion in debt that is coming due this year. Not to mention the debt and deficits that many lawmakers have mentioned in the big, beautiful bill. What are the plans for the $9 trillion?
Maria, we've seen a great demand from both domestic and overseas investors for U.S. debt. We will make our decision on how to term the debt out over the next couple months. But I can tell you right now, the short-term rates, 2-year rates are telling us that the overnight rate is too high, and we're gonna take that into account. But you know,
the rate is too high. Why? Because the debt is too high. That's the issue. It's not the Federal Reserve that's causing the problem. You don't want a Federal Reserve at a zero bound interest rate or just slightly above. Because if the economy does falter, how is it going to cut rates if it's at zero bound? It's going to go negative. And negative means if you have savings, the bank is taking that savings. It's a bail-in. You don't want zero bound interest rates at the Federal Reserve level, especially when you have a robust economy. If you have a robust economy, the interest rate should be higher. Why? Because if the Federal Reserve needs to lower rates, where's the shock absorber? If the Federal Reserve was at 1%, and let's say we had an 8-month recession or a 12-month recession, how are they going to cut rates? They're going to cut rates by 1% and it's really going to be stimulative? No, if you're at 5 or 4 and you start cutting rates to, and you go down to 2 or 2.5, that's substantial. But if you're going from 1 to 0 or a half a point to 0, how's that stimulative? You have to go negative. And when you have negative, that's a bad economy. You do not want to be at negative. Would you drive your car without shock absorbers? Because that's exactly what Trump is saying.
management process is very regular, very methodical, but we are going to take these contingencies into account.
And not only that, with the yield. Let's
Hello.
say.
My name is Adam Ferrari, the Chief Executive Officer of Phoenix Energy. I look forward to you joining.
And let's say right now, if you look at yields, 10-year yield, all right, and you want to buy a 10-year bond, or you want to buy ETFs that are, or mutual funds that are tied to the treasury market with a higher yield, you're going to have more interest coming in. All right, you're locking in at an interest rate. Now, there's these price differentials between countries. And the UK and the United States are kind of competing with each other right now with that. So if you are an international investor and you can get a 5% 10-year, I'm just making these numbers up because I don't know what the number is for the UK. It's probably 4.5 for the 10-year, but whatever. But let's just use it as an example. Let's say the UK's 10-year bond is at 5%. Just as an example, all right? I don't think that's the number, but it's just as an example. So, and let's say the US 10-year is at 4.5%. Would you invest in the United States bond market if you're going to hold for duration for the 10 years? Or would you rather have it for the UK and lock in that interest? Because of the price differential, you're going to want to lock in the interest for the UK bond, not the US bond. So if you lower rates, so the point I'm making is that when you lower rates, you have to be coordinated with other central banks. You got to move in tandem, or it changes the dynamic of flow between the bond markets. That's another issue that's going on. And the UK's yields are going up. So if you go radically in the other direction compared to other central banks, well, why would people invest in your bond? And we are the risk-free rate. But the point here is that you have to be higher than the other countries to get that foreign investment to lock in at that higher rate to buy that bond. Now, if you're a more short-term investor and you're looking at the price, and then it's the opposite of what I'm saying. But I'm concerned about bringing down the Federal Reserve rate too fast, too fast and too early, because I think that's going to be inflationary.
Know that you have watched the 10-year. It has broken below 4.3%, now sitting at 4.26%. And of course, we are awfully close to the date that the government runs out of money.
And think about it. We were at like 4.6, 4.5 on the 10-year when this fiasco was happening in April. All right. Well, now we're at 4.2. So just the rates are naturally going down without the Federal Reserve having to intervene.
Yeah, Mr. Secretary, and of course, in the big, beautiful bill is that point to raise the debt ceiling by $5 trillion. Secretary, when is the X date? Is it August of this year?
Well, Maria, at 7:45, we won't have to worry about the X date anymore. This should get us well into 2027, and we'll go from there. But I can tell you that I had lots of meetings with the Freedom Caucus and lots of the Senate so-called deficit hawks too. And look, Maria, I'm a deficit hawk. President Trump's a deficit hawk. We are going to fix this fiscal problem and get it under control. That should bring down interest rates, that signal. But these Freedom Caucus members, they've shifted the center of gravity and the conversation, just like the deficit hawks in the Senate have, just as President Trump has. So we are laser focused on bringing this deficit down.
Yeah, and I know that the president has been prodding Jay Powell to cut interest rates. Do you believe that if he cuts rates on the short end, then long-term rates would also get impacted by that?
Of course.
I think that inflation expectations should be coming down. Inflation expectations are very well anchored. The dog that didn't bark was inflation due to tariffs. I call it tariff derangement syndrome. And the Federal Reserve, it's a committee. The committee seems to be a little off here in their judgment. And I think that as we see inflation coming down, just based on previous Fed models, that rates will be lower.
Now, Mr. Secretary, this morning, Bill Pulte from the FHFA is demanding that Jay Powell resign immediately because of this $2.5 billion project on a new Fed headquarters. Do you want to see Jay Powell resign?
Look, I think that we have been trying to get waste, fraud, and abuse out of the system. So that is it healthy for the Fed to get their spending under control, just like everybody else in this time of belt tightening and right sizing the federal government? Sure.
So would you want to see him resign?
I want to see the Fed right size their budget.
I see. I mean, look, Secretary, you've got an incredible job, the leading person in terms of the economy in the world, the U.S. Treasury Secretary, and yet your name was on a list, apparently, for the president considering you to run the Federal Reserve. Is that a job you would like?
We have a lot of great candidates for the Federal Reserve. I think I have the best job in Washington. I get to interact with the president. The cabinet that he's chosen is fantastic, and being part of that cabinet is the dream of a lifetime for me. But I will go where the president thinks that I am best suited.
Has he asked you to potentially take on that role?
Maria, I'm not going to reveal private conversations, but I'll tell you, there are a lot of good, strong candidates, and we get to hopefully fill 2 seats next year.
That's right, yes. And of course, the president just nominated Mickey Bowman for the vice chairman, and she is already coming up with new ideas to ease back on regulations for the major banks. I want to talk to you about deregulation. That's another major point of the president's agenda. And a lot of people talk about what this big, beautiful bill is going to yield in terms of growth, but they're not focused on the growth that may end up coming up and end up helping to pay for it. What's your take on deregulation and what that will mean for economic growth in the second half of the year and 2026?
So, Maria, as I said earlier, the three legs to the stool, trade, taxes, and deregulation. Trade and taxes have been out front because those are negotiations or legislative maneuvers. The deregulation is very important. And in President Trump's first term, the reason we got the substantial non-inflationary growth was because we opened up the supply side via deregulation. And as you just said, on the financial side, the Vice Chair Bowman at the Fed in charge of the financial regulation is smartly and safely working on ways to unleash the regulated banking system, including small banks, which are in danger of being wiped out. And I think for Main Street to do well, we need for small banks to do well. So we are focused on that. We are focused on permitting. President Trump wants to make the U.S. an AI superpower. And we have cheap energy. We have the tech know-how more than any other country in the world, but we haven't been able to get those permitted. So we are determined to permitting, deregulation, and that will bring costs down for American families.
So do you think the permitting comes out of the big, beautiful bill? Will we see the permitting actually codified?
A lot of the permitting is either via executive orders or it's via the departments. So President Trump has been laser focused on this. As a builder himself, he understands the process and is very good at expediting these things. So, if we are going to be an energy superpower, if we are going to achieve AI dominance, if we are going to build pipelines, then this permitting crisis has to be solved. If we are going to get more lending back into the regulated banking system, then we need to fix this overregulation that came out of the GFC in the financial services industry.
And what would be an appropriate growth level that we should expect for the second half or for 2026 economic growth?
I think we could see growth in excess of 3%. We've got this great AI productivity boom. We couple that with the deregulation, these trade deals. We've got money coming in from overseas in terms of foreign direct investment in the trillions. Once the bill passes at 7:45 today, business will have great certainty, as we talked earlier, about the full expensing. So I would expect in the third, fourth quarter, you are going to see factory announcements like we haven't seen. That until this bill was passed, American businesses could not be 100% sure that if they broke ground, they would get the full expensing. This morning, they will have that certainty, and I think we could see a real acceleration from here.
And I know that you've also got the crypto legislation expected.
Please go to my store, the-studio-reykjavik.com, and get the Cleanse. Cleanse is a liquid that you use a teaspoon every day, all right? You swish it in your mouth, gargle, about 20 seconds, 30 seconds, and what that's gonna do, and then you swallow it. But then what that's gonna do is improve your oral cavity and your oral pharynx, help with the mucosal barrier, and help with the health of the epithelial lining. When you do that, it's gonna boost up your immune system. So please go to my store and get the Cleanse. This is the first pillar of the core protocol. The second pillar is taking C60. The third pillar, taking turmeric, ashwagandha, and lignans. And the fourth pillar is taking the Boomer Boost. Now let's talk about Boomer Boost for a second. Boomer Boost is 68 nutrients. It has a very comprehensive compound profile here. Read the label on my store, the-studio-reykjavik.com. You will see the benefits of this within 72 hours of taking it. Now, this is a powder. You take it every day for your breakfast or for your lunch. You're going to lose weight safely. You're going to have a steady burn of energy throughout the whole day, and you're going to have more vitality. It's going to target multiple systems. It's going to target your cardiovascular system. It's going to target your brain function, musculature, boost up your energy levels, and rev up your metabolism. So please go to my store, the-studio-reykjavik.com, and take the Boomer Boost. Take a scooper a day, mix it with soft foods, filtered water, milk, or a smoothie. Do that every day for breakfast or for lunch. And you're going to lose weight safely, and you're going to help control your A1C level. And when you apply that in a holistic fashion, then you're going to slow down the aging process. You're going to get healthier. You're going to have more vitality. When you have more vitality, you're going to be moving around, and you're just going to have a better life. And then when you do this, there's a compound effect throughout the years and throughout the decades. And when you get into your geriatric years, guess what? You're healthier. You have more bone density. You have better cognitive function. You have better blood flow. You have better cardiovascular health. These are all very important. So please go to my store, the-studio-reykjavik.com. Get the Boomer Boost, get the cleanse, use discount 5, you get $5 off any order. Another great product that I have is something that I partnered up with Rainbow Herbals, and we developed these deodorants. They're dual purpose. These deodorants will help to detoxify your body, and you use it as a daily deodorant. Now, you can get it in peppermint, lavender, and tea tree, or in citrus. Now, these deodorants are made from essential oils from the Himalayas. You can't get a better deodorant bar than this. Very high quality, extremely high quality. It's a little bit more expensive, but it's extremely high quality. So please go to my store, the-studio-reykjavik.com. Help support the work that I do. Get a few bars of these deodorants and help to improve your health. So you're using it as a deodorant, and you're detoxifying your body. And when you detoxify your body regularly, guess what? Your endocrine system works better, your immune system works better. And guess what? You age slower. And lastly, get the structural nano silver toothpaste. This will whiten your teeth, freshen your breath, help with your gum line, help reduce inflammation at the gum line. And with good oral hygiene, you're actually helping your vascular system and your valvular system. So please go to my store, the-studio-reykjavik.com, and get the toothpaste. This is very high quality toothpaste. Get a few bars or a few tubes of this for your household. Use the toothpaste every day, and what's going to happen is you're going to notice that your oral hygiene is much better than using the older toothpaste. Now, it's a great way to help support your health and your wellness, but also to help support the work that I do. I'm giving you a lot of information on how to improve your health and, oh, by the way, make a little bit of money on the market. So please go to my store, the-studio-reykjavik.com. Use discount 5. You get $5 off any order. And if you spend $150 or more, you get a free gift until supplies last.
I know he covers all the stuff going on in Washington. Mike, where are we in terms of getting something signed here today? Where are we in this process?
So basically, the Republican leaders and President Trump have putting pressure on enough Republicans so they can pass this bill. They're just waiting for Hakeem Jeffries to finish his speech denouncing the bill. Each congressional leader can speak for an unlimited amount of time, but they can't go to the bathroom while they're speaking. So you're kind of limited by biology and how long you can go. But he's making his case. He's making it at great length and vigorously. But once he's finished talking, then the Republicans will vote. They believe they have the votes. And then it will pass and go to President Trump. He's planning on signing it on July 4th.
Absolutely. I'm just seeing Hakeem Jeffries started speaking this morning at 4:54 a.m. East Coast time. And as Mike mentioned, still speaking, Isabel.
The most read story is actually this story. The U.S. House nears passage of Trump's tax bill after all-nighter. If you go to READ, can you remind us again, Mike, what the main tension of this bill is? What is taking so long? We have President Donald Trump tweeting that, what are you trying to prove? What are Republicans waiting for?
So the big criticism Democrats have of this is they sort of feel like it's a Robin Hood in reverse, that you're taking from poor people to give to rich people. Most of the tax cuts primarily benefit more well-off people, and a lot of the social safety net services they're cutting cover lower income people, and they don't get much in the way of tax breaks. Among Republicans, though, I mean, there are narrow Republican majorities in both houses, and the president's Republican. The Republicans back this. They feel like the big tax cut will promote economic growth. Among the Republicans, the tensions are some of the conservatives wanted deeper cuts in spending because they're going to have like a giant $3 trillion plus deficit as a result of this bill on top of the other deficits, whereas some of the Republican moderates from swing state districts didn't want to cut Medicaid and food stamps as much as this bill cuts them.
I have a question here. Matt from Westchester writes in, what's the SALT tax language? Do we have any finalization there?
That's sort of news you can use if you live in New York, New Jersey, or California, and that's all final. That's settled. The limit on the SALT tax goes up from $10,000 to $40,000 for the next 5 years. Then it goes back down to $10,000 for the remainder of the time.
How much pomp and circumstance are we going to see on July 4 when and if President Donald Trump signs this, given that he's really drummed up this deadline of his?
The White House hasn't given their plans for the signing, but you can bet that President Trump, this is his signature main legislative wish. This is all he's really asking Congress for this whole 2 years. And this is his big ask. You can imagine he's a real estate promoter. He is not shy about promoting success, that he will have an over-the-top celebration for this.
All right. Mike Dorning, thank you so much. We appreciate that. Mike Dorning, Bloomberg News. He covers all Washington, D.C., down there in D.C. Hakeem Jeffries, he'll have to keep speaking until around 1:30 p.m. East Coast time if he wants to set the record for a House floor speech. Then Republican leader Kevin McCarthy, Republican from California, set that mark by speaking for 8 hours and 32 minutes in opposition to then President Joe Biden's signature Build Back Better legislation in 2021.
And I believe Paul Sweeney has set the record for staying in the studio without a bathroom break.
Without a bathroom break. So, I mean, I guess this happens, I guess, is the way to
Yes,
think
but
about
it's unbelievable. 8 hours is too long.
Yeah, so, but making, we always say, hey, where are the Democrats? Well, I guess they're making a little bit of a stand here today.
Well, if the bill passes, then that will help the market a lot. And if it doesn't pass, then I suspect that we're going back down to below 6,250, probably closer to 6,000. Right now, the S&P 500 is trading at 6,273. VIX is trading at 16. Euro is trading at 1.17. Oil is at 66.84. BITO is trading at 21.19. Japanese yen is trading at 144.9. And natural gas right now is trading at 3.486. There was a little bit of a sell on natural gas at the moment here. But natural gas is very, it goes up and down, up and down. It's there's a volatility to the price. So that's expected. So please go to my store, the-studio-reykjavik.com. and get the collagen. Collagen is a dual purpose supplement. You get a month's supply in this container. It's a powder. You mix it with soft foods, filtered water, milk, or even a smoothie, but take it every day and it'll help with your skin, your nails, your hair, your joint health, your cartilage, your musculature, and your bones. So take it every day. Now, what's shown on the label is the typical amino acid profile in the collagen. Read the label on my website, the-studio-reykjavik.com, but take it every day, super important. And if you take it with the vitamin C and magnesium and drink filtered water, 32 ounces or 64 ounces throughout the day, the vitamin C and the collagen will cross-link and improve the dermal layer. In addition, if you also use my gel and apply it daily on your skin, you're helping with the health at the topical layer of your skin. At the dermal layer, you're helping with the collagen and the vitamin C. And if you take the C60 and the resveratrol, you're helping your basal layer health. And that's a great way to improve your skin. And that's an anti-aging stack. Now let's talk about the gel. The gel you can get in a tube form or in a quick dispenser form, right? You use it the same way. You can apply it on your skin every day as a daily skincare. You can put it on a wound and it'll help to heal the wound. In addition, if you're not feeling well or someone around you is not feeling well, put it on your hands, around your mouth, around your nose, around your eyes, around your ears, lightly coat your nostrils. It stays active for 5.5 hours. You can also use it as an aftershave. So please go to my store and get the gel. And again, if you couple it with the collagen, you're increasing the benefits of the skincare. Now, it's really important to take Clarity Factor. Many people have brain fog. So by taking Clarity Factor, you're going to get rid of that brain fog. In addition, what you're going to do with the Clarity Factor is you're going to help your neurons to support memory. All right, so you're getting rid of that brain fog. You're going to be able to think faster. You're going to have better memory, and you're going to be able to concentrate better. And so by taking Clarity Factor regularly, what you're going to be essentially doing is you're improving the neuroplasticity. And so when you have neurons connected to other neurons, their dendritic connections improve, you're going to be able to think faster. You're going to be able to improve your memory. So it's really important to take this supplement, Clarity Factor. Drink it with filtered water. But it's a holistic approach too. Proper diet, proper exercise, the 4 modalities, like I've been saying. Stay away from processed foods. Train your mind. It's learn new things. Read, write, talk to people. Stay away from screen time. And what's going to happen is that you're actually improving your neural health. Now, a lot of people aren't talking about it, but in 5 years, you're going to see a lot of people within your social network where they're going to have cognitive decline. Within 5 years, you're going to start seeing it. There's going to be this big pulse of individuals having cognitive function issues, maybe even Parkinsonian tremors, gait issues, balancing problems, memory issues. You're going to see this within a 5-year and 10-year. It's going to pulse. So there's going to be a big jump of individuals having cognitive problems in 5 years and another big pulse in 10 years. Now, of course, there's going to be people developing symptoms between these inflection points. But it's very important to understand that we are going into an age, we're going into an era where many people around us are going to have cognitive decline. Super important to protect your neurons. So please go to my store, the-studio-reykjavik.com, get the Clarity Factor. It gets rid of that brain fog, but apply a holistic approach to get the max benefits from it. Use discount 5, you get $5 off any order. If you purchase $150 or more, you get a free gift until supplies last. So go to my store and get the supplements.
A jump in state and local government employment, particularly in education. Now, with a solid report like this, traders have all but eliminated chances of a Fed rate cut for this month. Right now, we have the S&P 500 47 points higher at 6275. That's a record. The Dow Jones Industrial Average up 363 points. The NASDAQ 100, another record here of 211 points. That's up almost 1%. The 2-year yield, that's climbing 9 basis points higher right now. Yields higher, 387 on the more policy reactive 2-year. Municipal bond news. The Toms River Regional School District in New Jersey Threatening to file for bankruptcy, they cite years of state funding cuts. They've authorized the district staff to consult with bankruptcy attorneys. Toms River School District boasts an investment-grade credit rating by S&P Global Ratings. The district has about $135 million of municipal bond debt outstanding. And it kind of reeks of like a stunt.
You think so?
Yeah.
It's a big district. I think they have 2 high schools, Toms River North and South.
It is big. Oh,
Good,
because
good Little League baseball.
Oh, that's for sure.
That's for sure. They win
Multiple times have they gone to the Little League World Series. Right. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker, and that's your Bloomberg Business Flash. Isabel and Paul.
Isabel has no idea what we're talking about. Toms River, New Jersey. All right.
During the commercial break, we were discussing why fireworks on July 4th, Independence Day, which initially was ratified July 2nd by the Continental Congress, and then by resolution made to July 4th. But anyway, John Adams wrote to Abigail Adams in a letter that this should be celebrated by succeeding generations with pomp and parade, games, sports, guns, bells, bonfires, and illuminations from one end of this continent to the other. So
solid.
Very nice.
We have him to thank, and we're
Thank you,
all
Mr.
set
Adams.
July 4th this weekend. The weather's going to be great here in the East Coast. Isabel Lee, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live as well on YouTube. Donald Trump is set to impose sweeping tariffs on imports from countries around the world from July 9th. It marks the end of his 90-day pause and could result in the most disruptive shift in global trade in a century. To get some more reporting on this, we go to Brendan Murray, global trade editor for Bloomberg News. He's in our London bureau. Brendan, where are, like, if you step back in a 30,000-foot level, how should we be thinking about tariffs as we come up to this July 9th date?
Well, what we have are about 20 countries that are in active talks with the Trump administration. And so far, we've gotten a glimpse of 2 or 3 of those deals. The first one was with the UK, and they negotiated down some of their tariffs. President Trump's advisors negotiated a sort of truce with China. And then yesterday, the president laid out the broad contours of this deal with Vietnam, which has, not a giant economy, but it has become a pretty big exporter to the U.S. over the past several years. And so the president said he's going to put a 20% tariff on imports of Vietnamese goods, and then a 40% tariff on goods that come through Vietnam that have been transshipped there. Basically, Vietnam's a place where China ships a lot of its goods, sticks a label on it and says made in Vietnam, and therefore gets around some of Trump's tariffs on China. So they're trying to really crack down on this hub in Southeast Asia for goods that are transshipped from China through Vietnam. And this is one way they're going to do it. But we're expecting a number of other deals to be rolled out in between now and next Wednesday, July 9th. And we'll see some of the countries that we think are close are India, Taiwan, the European Union. They're sounding more optimistic about a deal, which would be a big one. The transatlantic trade relationship is huge, and so. But there'll be other ones with smaller countries too. South Korea seems to be kind of fading from the front of the pack. Japan looks unlikely to be able to come through with something comprehensive in the next couple days. But we're expecting these deals to kind of trickle out over the next 5 days.
There are definitely too many things at play. I wonder, do you think that the president will push back the July 9 deadline? We have Trump and administration officials recently indicating that the deadline might be pushed back, but Trump did tell reporters earlier this week that he wasn't planning on an extension.
Yeah, he's saying he's trying to maintain some flexibility there. I think basically countries are going to fall into 3 main buckets. They're going to get their deal, like Vietnam is getting. They're going to get a delay. They're going to get more time to negotiate. Maybe they agree on a few vague things, and then they get another 3 months or another 6 months. And then there's going to be the third group of countries that are just going to get handed their tariff rate, and there won't be any negotiation over it at all, according to Trump administration officials. So who knows how those 20 or 25 countries are going to divide up into those 3 groups, but that's basically where each are going to fall.
Hey, Brendan, how about our two of our bigger trading partners and our neighbors here, Mexico and Canada? It sounds like, what's going to happen there?
Yeah, they're on separate tracks. They are of course partners in the USMCA. North American trade agreement. So they are not faced with these so-called reciprocal tariffs that President Trump announced on April 2nd. So there was a lot of headlines over this past week about President Trump threatened to call off talks with Canada because of their digital services tax. Canada lifted that tax and said, "Fine, let's get to the negotiating table." So those talks are happening at the same time. Mexico is trying to get some exemptions on the steel and aluminum and the auto tariffs that they face from their goods entering the U.S. So those talks are happening in tandem with all of these others, but they're on a different they're on different subjects, and they're not subject to this particular deadline of July 9th.
With White House officials really framing this announcement and subsequent pause as a negotiating tactic and an art of the deal in action. Do you sense from your sources that there's tariff fatigue? I mean, it's been 3 months and there's just really little clarity, and we have just 3 days till, 3 working days until the deadline, and it seems like a lot is still up in the air.
Yeah, I think a lot of between investors, markets who are keeping an eye on this. As long as these tariffs don't come in at the very high rates that the president announced 3 months ago, then it's just kind of something that companies can absorb, governments can accept and move on and adjust, and supply chains will adjust to them. That there's the initial fear, as you might remember, when those first very high rates came out, markets sold off. We had a very quick turnaround from the Trump administration. They walked back those tariffs. So I think there's just a realization and an acceptance generally that this is just the way the world is going to be from here forward, that the U.S. is going to put a 10% tariff, at least a 10% tariff on all of its imports. And then it's got all these sectoral tariffs that it's going to impose on steel, aluminum, cars, pharmaceuticals, semiconductors, all sorts of other industries that are gonna face these tariffs. And of course, there are court challenges to the reciprocal tariffs that still need to be worked out. So those could be struck down at some stage. And so there's just a lot of uncertainty about how high these tariffs are gonna come in at, and how long and durable they're gonna be.
Brendan, thanks so much for joining us. Your reporting is really, really helpful because we're all trying to figure out kind of where we are in the world of tariffs. Brendan Murray, Global Trade Editor for Bloomberg News. He's based in our London bureau, Queen Victoria Street, right in the city of London, right across the street around the corner from the Bank of England. So it doesn't get any more City of London than that. Giving us the latest here. Markets on a trade shortened day, as Isabel was mentioning, the markets close at 1 p.m. Wall Street time. And we are higher here today. We got the S&P up about 0.8%. The Dow's up 375 points. That's about 0.8% as well. And the Nasdaq's up 180 points. It's about 0.9%. So pretty solid performance there. The VIX comes in now 16.4. Yields are higher. When at the 10-year Treasury is 4.33%. That's 5 basis points higher. The 2-year is up about 9 basis points, 3.88.
All right. The S&P 500 is 6,274 right now. VIX is at 16. So equity market's doing pretty well. Oil is trading at 66.82, and right now natural gas is trading at 3.461. Please go to my store, the-studio-reykjavik.com, and get the vitamin B complex. Vitamin B complex is really important to take. If you're 40 years of age or older, you need B complex, the vitamin B complex, to help boost up those energy levels. All right. The first 4 B vitamins helps with the electron transport chain to boost up the ATP. ATP is the energy source for your cells. It's a major energy source for your cells. It's not the only one, but it's a major energy source. So having more ATP means you're going to have more energy and your cells are going to perform better. Vitamin B complex helps with cellular metabolism. Super important, because when you get older, your metabolism goes down. And vitamin B complex has B12, and that's going to help with protecting your neurons. Now, resveratrol, something I've been taking for decades. Resveratrol helps with youthful gene expression, helps to get rid of senescent cells. Resveratrol helps to soak up free radicals, so you're reducing stress in the cell. And resveratrol helps the health of the mitochondria, so you'll have more energy. Very important to take every day. Stack it with C60, ubiquinol, NAD+, clarity factor, vitamin B complex. These are great stacks with resveratrol to get the max benefit out of it. So a great stack that's affordable is to take the vitamin B complex and the resveratrol together. Drink it with filtered water, take it every day. And again, apply a holistic approach to your life and you'll slow down the aging process. Another thing that's really important is to detoxify your body, preferably daily. Now take zeolite, take 3 drops underneath your tongue, drink small drops, just 3 small drops underneath your tongue, drink the filtered water, do that every day. And what's gonna happen is the zeolite is gonna bind to heavy metals, toxins, and chemicals, allows you to urinate them out within 6 to 8 hours. You do that every day and you clean your environment, you drink filtered water and you stay away from processed foods, you eat healthy. And what's gonna happen is you're gonna notice your endocrine system is getting into homeostasis, your immune system is gonna be more robust, and you're just gonna be overall healthier and you're gonna slow down the aging process. If you have lots of toxins that are affecting your system, you're gonna age faster. So take zeolite every day. Now, some people prefer a heavier detox, more intense detox. Well, you can do that with zeolite by taking 5 to 10 small drops underneath your tongue, drink the filtered water, do that every day until you finish the bottle. Do that once or twice a year. But I recommend that you do it every day, just 3 small drops. Please go to my store, the-studio-reykjavik.com, get the zeolite and detoxify your body. So a great stack is boost up those energy levels with the vitamin B complex and help with your neurons. Get the youthful gene expression with the resveratrol and detoxify your body with the zeolite. So please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order. If you spend $150 or more, you get a free gift until supplies last.
Well, down there, and I respect that. Hey, Ira, what did you and what did your bond market take away from some of all this economic data we had today, including ISM, which came in a little bit better than expected as well?
Yeah, well, I think in particular, people were concentrating on that unemployment rate, as well as the fact that you didn't have a significant, you had a slowdown in private payrolls, but you didn't have as significant a slowdown in aggregate payrolls. And those were the things that people were worried about. So the reason why the 2-year yield is off 9 basis points right now is basically we were starting to price in for the chance of a July rate cut. And that's basically off the table at this point. So September is now priced about 3/4 of a 75% chance of a September cut. I still think that's probably going to be a little bit too early, but nonetheless, taking out July meant 9 basis points on 2s, and that's exactly what we've seen.
We have Gregory Farinello of Amerivet Securities saying the Fed will take the summer off. It's really a surprising report. To your point, rate cuts for July are basically print to 0. September is kind of iffy. How did this shape your view moving forward? Did you immediately have to write a report? Did you and your team really were surprised and had to reshape or re-angle your outlook?
Yeah, it was. I mean, I guess a little bit. The consensus for the unemployment rate was for it to go up 1/10. Instead, it went down 1/10, and I think that was the single biggest surprise. We don't. Our colleagues over at Bloomberg Economics, they own that unemployment call. But I think it didn't really reshape our views very much at all, because we've been suggesting that we'll continue to kind of muddle along with employment situation with this overhang of tariffs, keeping the Fed on hold probably until at least the October meeting, which happens in very late October. So we're looking at the fourth quarter, in our view, before the Federal Reserve makes any moves at all, or we'll get enough data. I think the market is more sensitive to data now, thinking that, they're going to change on a dime. One bad data print means that the Federal Reserve may go or not, but that's quite frankly not the case. And one of the necessary conditions for the Fed to cut rates is a weakening employment situation. And while it's weakening, it's not getting weaker, right? So it's we're not yet at a point where the Fed will feel compelled to cut because of the job situation.
So to the extent that the market now has maybe a better feel on the labor market, and maybe the Fed has a better feel on the labor market with today's data, focus can then maybe move to inflation. what are the expectations in the market here? We haven't really seen any inflation creep into this market of any note here, which some people had feared with the tariffs and so on. What's the view there?
Yeah, well, there's a couple of things going on. Underlying there were some, when you look at the May data, there were some sectors that did see a little bit of an uptick in inflation in the goods sector, but that was offset in large part and will be offset again by lower energy prices, and as well as rents that are starting to flow through. Keep in mind, when we talk about rents and owner's equivalent rent, which is the housing component of the consumer price index, that will continue to fall just naturally because it takes a long time for 12 months basically, right, for rents to be adjusted to these new prices. So you're going to wind up seeing, yes, prices will increase, but they're increasing at a slower pace. That means that inflation is falling, and I think we're in an environment where, okay, goods prices go up a little, but with energy prices and housing prices starting to come down, the only variable left is, what are service prices doing? And in today's report, you saw that wages in the services sector were a little bit lower month on month in June than they were in May. So, I agree with you, Paul. Like, we haven't seen inflation and probably won't.
Interesting. All right, folks. Ira Jersey, we know him as...
And all of those economists back 10 weeks ago were saying that Trump's tariff policies were going to destroy the economy. I'm telling you, almost every single economist on Bloomberg got it wrong. Got it wrong with the tariffs, got it wrong with the sell-off in the market and where to allocate money. They got it even wrong with the way the interest rate curve was going to be affected by this trade war. And you're talking about economists that went to London School of Economics, or went to the University of Chicago, or went to Harvard, or Stanford, or elite institutions. All right, and they got it wrong. Almost every single one of them. And I was telling you, don't listen. They were wrong. Don't listen. Don't, this is going to play out much different. And guess what? Dr. Paul Cottrell was right. And all these economists on Bloomberg were wrong, or almost all of them. Less than 1% were right on Bloomberg. So you have 99 point some percent that were wrong on how this was all going to play out. Now, what worries me is that these same economists don't understand the emergent behavior that is starting to happen with the implementation of AI and how labor is decoupling. If labor decouples with capital, what happens to the overall economy? And if an economist says they know for sure, they don't. Because there's no economic theory that can explain it. Now, my worry is that as jobs start to diminish in 3 to 5 years, and less people are hired in, and it becomes more structural, and you have lots of debt that's out there at the sovereign level and at the individual level, how does that debt get paid off? Unless it's a major haircut or a reset. People were saying, oh, there's going to be a debt reset back in 2020. That didn't happen. But there could be a major debt reset when it comes to full implementation of artificial intelligence in the labor market, where unemployment becomes structural and companies aren't hiring. You're starting to see it with the new entrants of the job market, the ones that are coming out of college and they're trying to get their first job, those entry level positions. You're starting to see this emerge. Now, will it increase to other levels? I think so. Now, what is interesting, very interesting,
and almost ironic is the coders, that coding community, the computer scientists. Some of them are doing really well, right? Because they're tied to growing out this artificial intelligence infrastructure. But other coders are losing their job because the artificial intelligence can make the code. All right. So what's happening right now with coders is that they can now use an assistant that can help code blocks, chunks. And if you narrow what you need to do, the actual AI assistant can write the code. And you just tell it what you want. Do you want it in Xcode? Do you want it in Swift? Do you want it in Java? Do you want it in HTML5? Whatever. All right. You want it in Python? You want it in R? You want it in MATLAB? It can do it for you. But it works really well when you chunk it. When you ask the assistant in small pieces what you want. So if you know how to assemble the pieces, then you don't need as many writers. You don't need as many coders. And not only that, the software will reach the market quicker with less individuals. Now couple that, what I just said, with the assistant, the code writing assistant. So instead of needing, let's say, 50 coders to write an app, some sort of application, you only need maybe 2 or 3. Why is there so many layoffs happening at Microsoft? 9,000 right now and counting. So the irony here is that the whole computer science community is actually reducing the number of jobs that are available. So if you have a kid that's like thinking about a career and they're just getting into college, do not, let me repeat, do not have them go into computer science. Do not. They will not have a job. Do not have them go into computer science. Have them go into something else, but do not have them go into computer science. Now, if they go into robotics, that's a coupling of computer science, mechanical engineering, electronics. That makes sense. But do not have them be one of these pure computer science coders. There's not going to be a job for them out there.
Software shares in China. Really what this means is that these companies that have been supplying design technology to chip companies now once again free to do business in China. And, you know, we talked about Synopsys benefiting from this earlier, but for Cadence specifically, this is important because Bloomberg Intelligence was just warning earlier this week that, you know, its sales in China, which represent about 11% of total sales, they rose at a 15% annualized rate in 2021 to 2024, but then that dropped to just 12% of revenue in 2024. And so had this been the development not been a positive one, then that would have been problematic for this particular company.
What about DuPont, ticker DD? What's going on there?
That's right, Isabel. So DuPont also enjoying an update today. Shares currently up just 1.3% at the moment. And so we have the Financial Times reporting that a number of private equity groups, including Advent International and Platinum Equity, are vying to buy $2 billion worth of DuPont's assets, including the Kevlar bulletproof brand.
But part of it is you got to deal with the balance sheet. There's a lot of debt there for this company, so you have to figure out a way to deal with that. Rashmi Basu joins us here, Bloomberg News, a credit reporter. Rashmi, I loved your story here today. Talk to us about what J.P. Morgan, the banker for Warner Brothers Discovery, what deal did they kind of craft to deal with the debt problem at Warner Brothers Discovery before they could even split the company apart?
In order for the split to happen, J.P. Morgan needed to do a restructuring of the debt stack. So basically what they did is they provided $17.5 billion bridge, which is biggest bridge, massive. And they used those funds to take out existing debt. They cut about $3.2 billion of $32.5 billion of outstanding debt. And it was just a deal that really used a lot of distressed restructuring tools and applied it to an investment grade company, something we've never seen before.
Can you talk about how this has the potential to set a new precedent for companies, especially those in investment grade, to just renegotiate their debt moving forward?
So this kind of introduces a new playbook to the investment grade community in that it was an unbelievably short consent. It was only 5 days.
Yeah.
And it was even shorter for some funds because they had to turn in their consents within 3 days, given the processing times. Like they were depending on slower software, et cetera. So really this deal prevented lenders from being able to organize a group and fight for better terms.
How did they get away with that? Yeah. I mean, if I ever tried that back in the day when I was at Chase, the bondholders would just smack back at me, throw it right back in my face. How did they get that done?
They really relied on kind of a prisoner's dilemma in that there were winners and losers created in this structure, and they kind of stapled it to consent. There's no kind of rules around how long a consent can be. So they really utilized that deadline to prevent lenders from organizing. And also they, to JP Morgan's credit and to the other advisors, Evercore and Kirkland, they did provide an exchange rate that was higher than where the debt was currently trading.
Okay, I see. But so still,
a loss on the face value,
yes,
but a premium to current trading levels.
These are investment. This isn't junk. I mean, these bonds were investment grade, weren't they?
Yep. I mean, it kind of took away the
If I'm an
protections.
investment grade bondholder, I'm not taking this deal. I've never seen anything like it.
No, neither have we. And this is kind of the concern in the market that this is going to be the playbook that we're going to see for more and more investment grade companies. So the distressed kind of mechanisms are coming to investment grade.
But they must be taking a victory lap right now, although we do have the European Leveraged Finance Association releasing a statement warning that the whole process was, quote, a worrying negative development. And they say that this might be coercive in nature. How are others receiving this? And will it even be a precedent given warnings with stern language like this?
Right. So they're talking about the anti-boycott language, which basically prevents lenders from kind of banding together and deciding not to take part in a new issuance. So that kind of is the first time we've seen that language. And, as we know, in the distressed land, we see a ton of so-called liability management exercises. We see groups kind of forming, locking arms together with these cooperation pacts. But this one just basically prevents lenders from, again, coming together and not partaking in a new issuance. And, eventually JP Morgan is going to have to issue new debt. So this kind of helps them.
Again, what was also interesting to me was this, huge bridge loan that JP Morgan did. Because I know a lot of boutique investment banks, they're really good at doing these debt restructurings and maybe taking some business away from the JP Morgans and the Goldman Sachs of the world. I guess this is JP Morgan coming back and saying, well, listen, we've got this big balance sheet. It can help you get deals done.
Right. And not so long ago, we reported on a story about how JP Morgan was trying to take a bite out of restructurings and LMEs, et cetera. And one thing that we were hearing is that they have the balance sheet to do so, something that boutique firms may not. So this kind of gives them more validation.
And an interesting thing in your stories, you said the whole thing was so important enough that even Jamie Dimon received updates on it. So it's not like this one little niche group risking something big. Even the CEO is kept abreast.
This went to the top. So this was a big deal for JP Morgan and its bankers, the M&A bankers, the capital markets bankers, the restructuring desks. This was
all right. JP Morgan and the company may be doing a victory lap, but at some point in the next year, 2, 3, they're going to have to come back to the bond market. And these people are going to remember. And there could be a price to pay there. I know I would hold a grudge if I were a bondholder there. So anyway, great story. It got a green B, folks, and that means that it's a really, really good, cool story, and it's unique and it's scoopish and all those kinds of things that the journalists worry about. Rashmi Basu, thank you so much for joining us. Credit reporter for Bloomberg News. Great story. Right down my hallway.
Please go to my store, the-studio-reykjavik.com, and get the Gladiator Barley. Gladiator Barley will help to build muscle, bring down inflammation, detoxify your body, and soak up free radicals via superoxide dismutase. This stacks really well with Myotrol, which helps to build muscle through gene expression. So do your resistance training, take the Gladiator Barley. This is a high density protein. You should be taking this every day. And take a scooper a day, mix it with soft foods, filtered water, milk, or even a smoothie. Do your resistance training, and you're going to build muscle. Bring down inflammation. Your recovery time will be better. But when you bring down inflammation, if you're taking supplements that bring down inflammation, you're helping your joints, especially if you have osteoarthritis. You're bringing down inflammation at the cerebral level. You're bringing inflammation down at the vascular level. And when you do this, you're helping these different systems. You're helping your vascular system, you're helping your brain function, and you're also helping with your immune system. So please go to my store, the-studio-reykjavik.com, and take the Gladiator Barley. It's not just to build muscle. It's also to help to detoxify your body, bring down inflammation, and soak up free radicals. When you do that, you are slowing down the aging process. Now, use this stack to build bone density. Take the D3 and the K2 together. Do resistance training. This stacks really well with the Gladiator Barley. So you're building muscle and you're building bone density. Super important items in terms of slowing down the aging process. Now, vitamin D3 also helps with gene expression, and it helps to get rid of cells that need to go into apoptosis. So take the K2 and the D3 together, do the resistance training, build denser bone. But D3 and K2 also helps to pull some of that calcium depositing out of, sometimes in your vascular system, you'll have calcium deposits around plaque. So taking the D3 and the K2 will help to pull some of that out and reduce further calcium depositing around plaque in your vascular system. So you want to take the D3 and the K2 together, super important. Now, you can take separately the nattokinase or stack it with the D3 and the K2 to get added benefits, but nattokinase will help your vascular system. Nattokinase will break up clots because it's fibrinolytic, and nattokinase will help to lower your LDL levels and increase your HDL levels. Super important to control your lipid profile. Because when you have less LDL that's oxidized, if you have less LDL that's oxidized, that means that you have less plaque formation. So if you can control your LDL level and increase your HDL level, then you're helping your cardiovascular health. Now, what you want to do is you want to apply a holistic approach, and that is proper diet, proper exercise, right? And when you do that, you're helping your system. It's not just the supplementation, but when you do this holistic approach with the supplementation, you're going to target and you're going to get added benefits. So take nattokinase every day, help your lipid profile, and break up clots. Now, when you stack it with the K2 and the D3, all right, what you're doing is you're bringing down you're helping to bring down your LDL levels and increase your HDL levels. You're reducing oxidized LDL, and you're also reducing calcium depositing around plaque. So you're reducing the probability of adding new plaque, and you're reducing the probability.
I don't have an answer for that. Is there something else I can help with?
And you're reducing the probability of depositing calcium around plaque. So this is synergy.
Who performs depositing calcium?
I just wish Surrey would shut up. But the thing is that this is a completely unscripted show, and sometimes Surrey in the background will just talk. All right, so I apologize. But Get the nattokinase, the K2 and the D3 together. It's synergistic. It'll help your cardiovascular health. And like I said, the D3 and the K2 will help with bone density. Please go to my store, the-studio-reykjavik.com.
Higher by 49 points, up 0.8%, very close to session highs at 62.77. We've got the Dow up 336 now, up by 0.8%. NASDAQ up 201, a gain for the NASDAQ Composite Index of 1%. Our Mag 7 Index pushing higher as well, up 0.9%, with the 10-year currently yielding 4.33%, the 2-year 3.86%. Gold down 0.8%, 33.30 the ounce, and West Texas Intermediate crude 66.61 a barrel. WTI down by 1.2%. FedEx double upgraded to outperform at BNP Paribas Exane, with the broker saying the stock is, quote, arguably oversold. Rival UPS, meanwhile, upgraded to neutral from underperform. All this as UPS plans to voluntarily offer buyouts to union represented delivery truck drivers as the company works to slim down its operations. Again, FedEx up 0.7% after the upgrade. UPS down 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Isabel Lee and Paul Sweeney were live here in our Bloomberg Interactive Broker studio in New York City, which I would characterize as an A-plus piece of real estate. That's how the real estate people kind of grade it out. A, B, C. And if you're A in New York, you're fine. B and C are having some troubles, but I'd consider us A-plus anyway. We're streaming on the internet as well on YouTube, so check us out there. I tell you, there's a lot of news in the technology side of the business on OpenAI. OpenAI has agreed to rent a massive amount of computing power from Oracle data centers as part of its Stargate initiative, totaling about 4.5 gigawatts. I don't know what a gigawatt is, but it sounds big, of data center power in the U.S. So I have no idea what that means. And OpenAI is not, I mean, Bloomberg AI is giving me some stuff, but I need to go to the source. Anurag Rana, technology analyst for Bloomberg Intelligence. Anurag, it seems like we're seeing a lot of deals getting inked here in the tech space. This AI story is still moving along at a great pace. Talk to us about what's going on at Oracle.
Yeah, so this is something we discussed a few days ago when Oracle was up, sharply at that point. They didn't disclose the name of the client, but that seems like, as we said, it is OpenAI. This is part of the Stargate project that came out right after the president got elected at the beginning of January or the end of Jan. This is a big project. It's going to take several years to build out. It's going to be very humongous data centers across the country and perhaps even globe, where OpenAI is basically buying computing capacity from Oracle with the help of SoftBank, funding part of that particular project.
What's your sense of this deal? Because we have credit ratings, S&P saying that Oracle Cloud's infrastructure building spree was straining cash flow and that the current spending pace is higher than anticipated. Is that also the view you have?
Yeah, it's going to be much higher. In fact, we think the company gave guidance of about capex of $25 billion. We think that's going to be low. It's going to be, well north of that over the long term. I mean, over the next 3 to 5 years. Remember, just a few years ago, they were only spending about $5-6 billion a year. But frankly speaking, if you really want to play in the cloud infrastructure game or AI infrastructure game, you really need to spend the money up front in order to get those workloads down the road. Microsoft is spending, Amazon is spending, and frankly, for Oracle's good fortune, they actually have a client who's willing to pay them ahead of time, or they have an agreement so that they can go out and build this data center and they can recognize revenue over the next few years.
Oracle will develop multiple data centers across the U.S. with partners with sites in several states under consideration, including Texas, Michigan, and Wisconsin here. Where does Oracle fit within kind of your broader AI theme, Anurag?
Yeah, just about 5 years ago, to be honest, they were pretty much absent in this game because their cloud infrastructure was there to take care of their clients only, and nobody else was renting it from them. I mean, there were certain clients, but not so big. I think the TikTok deal really made, helped them out because TikTok runs on Oracle Cloud infrastructure. They gave them some credibility. They've been spending a lot of money to expand their data center footprint. I think they can afford to do that because they have a very incredible, profitable, database business where they are the market leaders. They have a lot of cloud applications where they generate a lot of free cash flow. So they established this business, and now they're reaping the benefit of it. As it relates to, let's say, AWS, they're still very small in size. In their infrastructure as a service business, last year did $10 billion in revenue, as compared to, let's say, Amazon, which is running at about 100 billion or so. But this particular customer, or this customer and a few others, by FY28 will add another $30 billion on top of the 10 that we are talking about. So their cloud business really becomes much stronger down the road because of this deal.
What about Microsoft? Lots of news here too. Their gaming division laid off hundreds of employees, and specific to Xbox, this is the fourth mass layoff at least in the last 18 months. What is their strategy here?
The strategy, I think, is by the CEO saying, listen, you use these AI tools, become more productive, and I'm not going to hire at the same pace as we used to hire before. And I think that is the game now. I think this is going to go on and carry on to other tech firms, whether it's on the software landscape or any of the other subsectors. But I think you're going to see this theme recurring over the next 12 months where CEOs are saying, you really need to figure out your productivity before you ask for a headcount. And I think that is, frankly speaking, that's not good for the downstream players, people who are selling software packages to these companies, HR software, sales software. But there's not a whole lot anybody can do about it at this point.
Anurag, I know you and Mandeep and your technology team have done deep dives into AI. And folks, there's lots of great Bloomberg Intelligence research out there on the terminal. And so check it out. But there's some serious deep dive work, some of the best on Wall Street. If you want to learn about what AI is, check that out. Anurag, I'll tell you what I say, which I don't hear many people talking about. This will replace people. AI is going to replace people across, I think, countless industries. What do you guys think?
No, I think that's a very valid view. And as I was telling you on the Microsoft's case, when we go pre-chat GPT era, for every $1 percentage points increase in revenue for Microsoft, their headcount used to grow somewhere around 0.7 or 0.8 times. We're close to a point that it's going to be very difficult to see that ratio now because Microsoft revenue is going to grow let's say over the next 12 months, somewhere around 13 to 15%. But I don't think the headcount is going to grow anywhere more than 4 or 5%. And that's frankly is the asymmetric growth between revenue and headcount that it's going to recur throughout the entire technology, space. And that's, frankly speaking, it is good for the shareholders, but not so good for if you are a tech worker in this landscape.
What about the tens of billions of dollars spent on data centers and application development? We have Microsoft, for instance, pledging that it would put a lid on that cost. Are you also hearing that same vibe from other companies? And by the way, to Paul's point, that's kind of sad because I hope we still have a job, which is why I keep cooking, because I think cooking will not be replaced by AI. Back to AI costs in Microsoft.
Yeah, see, for Microsoft, they have already pledged, let's say over the next 12 months, somewhere close to $100 billion for the expansion of their data center and all the AI infrastructure build. That revenue, that the pace of that growth is going to slow down over the next, let's say, 24 months. But what we don't know is, beyond in FY27 or 28, whether it's going to continue that level or not. Right now, it is driving some growth for them, but it's also hurting margins. All this revenue that's coming up actually has a much lower margin structure than their core business. So we really have to see, how they're going to deal with margins. And one of the ways they can do that is by reducing headcount. So I think they're going to give guidance by the end of this month when they report results for their fiscal year, which is FY26. And I think that's where they're going to see some of the margin benefits of these layoffs.
Anurag Rana, thanks so much. Appreciate it. As always, Anurag Rana, Senior Technology Analyst for Bloomberg Intelligence. Let's get back to these markets here. We've got the S&P's up 0.8%. We're joined by Nancy Tengler, CEO and Chief Investment Officer, Laffer Tengler Investments. Nancy, thanks for joining us here. One of the trades that really took hold, I guess, earlier in the year during some of the period of volatility was investors moving or I guess reducing their allocation to the U.S. and going non-U.S., for example, European equities. Is that a short-term trade or is that something you think is a longer-term investment allocation?
So I'm convinced, and I'm maybe wrong about this, that this is a short-term pivot to rest of world, particularly in response to the tariff confusion and tariff terror. from the president's announcement. And so I think if you look at growth and you look at where it's coming from, it is definitely not coming from Europe. I think Japan is sort of a separate and different issue. And then you have a unique set of considerations with China. But in terms of where I would want to be investing marginal dollars, despite the dollar weakness, I'd still be focused on the U.S. because if we are in a slowing U.S. economy, which means we're probably in a slowing global economy, you want to own the reliable earners. And most of those companies are in the technology space, and most of that is based in the U.S.
Paul, I've been hearing the term mega, make Europe great again, because of the outperformance we've seen this year. But Nancy, back here in the U.S., many have been encouraged by the rapid recovery of the stock market, but are concerned that valuations are still high. Where are you finding conviction in? What kind of names?
Yeah, so we were adding to a number of the tech names during the sell-off. And that was, a good decision, and we're happy with that. But since then, we've been adding to names like Sherwin-Williams, TJ Maxx, Home Depot, on an expectation that the housing malaise will turn into not a boom, but a recovery. And that will obviously need to come with a Fed rate cut or two. But we think, usually the market discounts that ahead of time. And then in addition to that, we were adding to the natural gas names and really sort of broadening out the portfolio. We moved Quanta Services into our 12 Best Ideas portfolio a couple of months ago. And we've really just been upgrading the quality because we've actually had the opportunity to do that with sell-off.
Nancy, we've got about 30 seconds left. Goldman Sachs, it's on your list. Why?
Well, it's in our 12 Best Ideas portfolio. It was one of our 5 for 25. And the expectation was that deal making would accelerate or re-accelerate this year. They just raised the dividend 33%. So there's a lot to like there. It was also a valuation story, so we'll see.
And the stock is setting not only a 52-week high today, but an all-time high today. So that's been a good call, Nancy. So Nancy, thank you so much for joining us. Appreciate that. Nancy Tengler, she's the CEO and Chief Investment Officer of Laffer Tengler Investments. She's out there in Arizona. I didn't even ask what the temp out there. I'm going to Google that afterwards, but I'm guessing it's a triple-digit kind of thing. So you pay the price for
84.
Only 84. That's not bad at all. Usually you can get some crazy numbers out there. S&P 500 up 50 points. That's 0.8 of 1%. The tech-heavy NASDAQ is up about 200.
All right, S&P 500 is at 6,278. VIX is at 1639. Please go to my store, the-studio-reykjavik.com. Take the lozenges and drops. If you have an irritation in your throat, no matter what the season is, I highly recommend that you have lozenges and drops available at home and at work, because you never know when you start that irritation. But if you mitigate that irritation right away, you're protecting your oral pharynx and that mucosal barrier and the epithelial lining. If the epithelial lining is disrupted and there's inflammation, then that irritation will exacerbate and it may cause further problems down the road. So you want to take lozenges and drops the moment you have a throat irritation. Now, I have it in the drop form or in the lozenges form, which are larger. You get 21 in each bag. I have elderberry zinc in stock. Get a few bags for your household, but the drops are smaller. You get 100 in each bag, and you can get it in blueberry flavor, cherry, and honey and lemon. All right. So go to my store, get the lozenges and the drops, get a few bags for your household. You never know when you need it, but if you mitigate it right away, you're reducing further problems. And a lot of people don't realize that if you have, let's say, a minor cold, all right, for 5-7 days, it takes 2 weeks to heal, even if it's minor. If it's major, if it's moderate or major, it's going to take weeks, sometimes months, depending on how bad it is. But the thing is that a minor cold will take 2 weeks to heal tissue. So if you get sick, let's say 3 times a year, that's 9 weeks out of the year that you're either sick or healing from the sickness. And prevents your body from healing other areas, being focused on other areas of your body. So if you look at people that get sick regularly, they age faster. All right. And I just told you the reason. So you want to bring down that inflammation. You want to boost up that immune system, and have just a more robust way to fight anything that you may contract. But mitigating throat irritation right away is super important. In the news, you've been hearing about this, razor throat. Well, be prepared. I'm telling you, be prepared. So get the drops and the lozenges, get a few bags for your household. Please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. And if you spend $150 or more, you get a free gift until supplies last. Another great product that you should be taking as a base, foundational for your health protocol, are multivitamins and probiotics. I have a probiotic that's in stock that is a powdered version. This is what I take every day. I mix it with soft foods. You can also just mix it with filtered water, but take it every day. And with a good probiotic, you're going to help with your skin, your nails, your hair, but also with a good probiotic, you're going to bring down inflammation at the GI level. You're going to boost up your immune system. You're going to be able to absorb your nutrients. You're going to have better communication between your gut and your liver. So your metabolism is going to be better. And you're going to have a better communication between your gut and your brain. You're going to sleep better. You're going to get rid of that brain fog. All right. And then also by sleeping better, you're detoxifying your central nervous system and consolidating memory. So you're getting lots of added benefits by having a good gut biome. So please go to my store, the-studio-reykjavik.com, get the probiotic, take it every day. Super important as a foundational piece for your health protocol.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the session. It is a jobs Thursday. Treasuries fell. The dollar rose stronger than forecast. Employment growth soothes concern that the U.S. economy is poised to slow. So the Dow, the S&P, NASDAQ, all advancing. S&P right now climbing by 52 points. We're looking at another record, 62.80. Just over an hour to go until this market closes for a long holiday weekend for a lot of people. The S&P up 0.9%. The Dow up 336 now, up 0.8%. NASDAQ outperforming, up 1.1%. The Bloomberg Mag 7 index higher by 1%. 10-year 4.32%, with the 2-year 3.86%. We've got spot gold down $30 the ounce, down 0.9%. West Texas Intermediate crude down 1.2%, 66.64 a barrel. Well, ahead of the 4th of July holiday, Nancy Tengler, the Chief Investment Officer at Laffer Tengler, told us right here on Bloomberg Intelligence she is sticking with the U.S.
Despite the dollar weakness, I'd still be focused on the U.S. because if we are in a slowing U.S. economy, which means we're probably in a slowing global economy, you want to own the reliable earners. And most of those companies are in the technology space, and most of that is based in the U.S.
Nancy Tengler of Laffer Tengler interviewed moments ago right here on Bloomberg Intelligence. You can hear more of that conversation on the Bloomberg Intelligence podcast. Download it wherever you get your podcasts. Sources tell Bloomberg AstraZeneca is discussing a partnership deal with Summit Therapeutics in which it could pay as much as $15 billion over time to license a lung cancer drug. Shares of AZN, AstraZeneca, down 1.8%. Summit surging now by 9.9%. Recapping stocks higher, stocks at a record, S&P up 9/10. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Isabel Lee, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. It's Thursday. That means we check in with 1B Ritholtz. Barry Ritholtz, host of Masters in Business on Bloomberg Radio, also the founder of Ritholtz Wealth Management. Barry, I'm just reading your note here. I love how you bring in to the conversation sharks. It is July 4th weekend. Local media are filled with accounts of shark sightings. I will be in the ocean by about 3:15 today. But it's also on the 50th anniversary of the movie Jaws. How do you link sharks and Jaws into investing, Barry?
It's hard to find a better parallel, which is kind of amazing. Investors fear the wrong things, as do people on the beach. So the last year we have the full data for in the United States and was 2024. There was something like 28 unprovoked shark bites. And what that unprovoked shark bites means, not somebody playing with a shark in the shallows, fishermen, someone who's actually going into their space and interrupting them, just a random surfer gets bit. These things happen occasionally. They don't care for us. Sometimes if we're in a wetsuit, we look like a seal or their favorite meal. And one person in the United States died from a shark attack. And the math behind that is very parallel to what investors deal with. We fear the wrong things. We fear the big, splashy, emotional things, the headlines. You know, you are much more likely to be killed in the car on the way to the beach than you are to be killed by a shark. That's just the basic math, how frequently car accidents take people versus sharks. So what do investors fear? We fear market crashes. We fear hyperinflation. We fear tariffs. We fear all of these things. But the reality is what actually causes us problems are things like costs and taxes and excessive trading and chasing whatever the sexy hot new thing is. Our behavior is a bigger problem. You know, market crashes come and go every generation. We've been warned about deficits and hyperinflation for my entire adult life for the past half century. We should focus less on sharks and more on wearing our seatbelts, watching our cholesterol, and not texting while we drive.
So you also make a point that more people die driving than in shark attacks, and globally there are only 47 shark bites. So do you think that the markets are pessimistic right now? Is that the sense that I'm getting? Because if you look at stocks, at least they're very exuberant. We have many measures from Bank of America to Barclays showing irrational exuberance, actually.
So I don't know if I would call it irrational exuberance, primarily because there are lots of things that are bullish. I don't know of anything that's more bullish than all-time highs. And let me put some numbers on that so people understand exactly what I mean about that. So between 1957 and the end of the second quarter, the S&P 500 had 1,231 all-time highs. And if you're going to say, hey, that's almost 75 years, that's too long. Okay, let's take the previous bull market from 1982 to not even 2000 to 1999. Over those 12 years, the Dow Jones Industrials, they made 492 all-time highs. And so, yes, I will give you the 492nd all-time high in March 2000. That probably would have been a good one to avoid. But in order to miss that, you would have had to miss a substantial number of the previous 491 all-time highs that took place over the previous 16 years. And so we every time I did a column for Bloomberg back in 2014 talking about the same thing. No, market highs are not a bad sign. Whenever we see market highs, the usual suspects come out and say, this market is overvalued, it's toppy, this all-time high is a dangerous sign. The data doesn't back that up. And just to bring it to reality, had you followed that advice in 2014, that all-time highs that we made in 2014 were toppy, just think about how much you would have left on the table getting out of equities because, hey, this market's long in the tooth, it's Fed-driven, it's temporary, it's toppy. That was 11 years ago and hundreds of percentage points in gains. All-time highs are very bullish.
Barry, it's July 4th weekend. What are you driving to the beach this weekend?
The beach is going to be, we're going to take the truck out to the beach house, load up the car with some food, some rosé and the dogs, and then the beach car is the Jeep. We'll take the top off the Jeep and take that over to Rogers Beach, which is just this beautiful, pristine. You know, it's amazing how much we don't appreciate what world-class beaches we have on the Long Island shore, on the Jersey shore. You work your way up to Connecticut to Rhode Island. These are beaches that are as nice as any beach in the world. It may not be Turks and Caicos, but I'm very happy spending the summer on the beach of Long Island.
Very good. There you go. That's all you need to know, folks. I concur that for the Jersey Shore. Come on down. It'll be beautiful this weekend. We got to get Isabel down there. We got to get her off this island of New York City. Barry, thanks so much for joining us. Barry Ritholtz, he's host of Masters in Business. Also, he's the author of the book, How Not to Invest. So go check that out on Amazon. It's a great book. I read that earlier this year. And he's also the founder of Ritholtz Wealth Management. So we got to get you off this rock here. There's a big tri-state area that's got a lot of cool stuff.
And I'm a tropical person. I grew up with beaches, so now I feel like
Philippines. So that, you have a very high bar for your beaches.
I'm a bit of a snob, but I'm sure it's beautiful in Jersey Shore.
The water's probably not as warm as you're used to. We're at 71 today. That's a high for the season so far.
What is that in Celsius? Probably 30.
Oh God, I don't
20.
know. I don't know. Yeah, it's 20. So what do you like it?
I like it at 30 Celsius.
So that would be 80 here.
I was in India 2 weeks ago, and I heard you were worried about me, so that was sweet. I think that's around 90 Fahrenheit.
Wow. Okay. That's a whole different ballgame. Yeah. If we get 70, we're feeling pretty good about things. All right. Let's take a look at these markets holding on to the gains. That's for sure. S&P's up 55 points. The Dow's up 340 points. The NASDAQ's up 226 points. That's 1.1%.
Please go to my store, the-studio-reykjavik.com, and get the dual purpose supplement, olive leaf extract. Olive leaf extract helps with your immune system and your cardiovascular system. It brings down inflammation systemically. That will help with your immune system. By bringing down inflammation at the vascular level, you're reducing plaque formation. And olive leaf extract helps your lipid profile. It helps to bring down LDL levels and helps to increase your HDL levels. When you reduce your LDL, you're reducing the chances of oxidized LDL. And oxidized LDL forms plaque. So if you have less oxidized LDL, you have less plaque formation at the vascular level. And ubiquinol, super important. If you're 40 years of age, you need to take ubiquinol. Ubiquinol is the most bioavailable form of CoQ10 that you can purchase. Most people that take CoQ10, you're taking the wrong type. Newsflash, you're taking the wrong type of CoQ10. All right. Most people are taking CoQ10. You're taking the lower bioavailable version. Get ubiquinol from my store, the-studio-reykjavik.com. You can't get better CoQ10 than what I have in my hand here. Get the ubiquinol. It's the most bioavailable form of CoQ10 that you can purchase. Now, ubiquinol, what it does is it's going to soak up free radicals. That's going to help to slow down the aging process and reduce the stress in the cell and in your tissues. By reducing the stress in the cell and the tissues, you're going to help with the health of your mitochondria. So you're going to have more energy, because a major energy source for your cells is mitochondria to produce ATP. And ubiquinol will help to protect neurons. Super important. And like I said, in 5 years, you're going to know a lot of people that have neurological problems. You're going to start seeing Parkinsonian tremors. You're going to start seeing memory loss. You're going to see balancing problems and gait issues. In 5 years, you're going to see a lot of people having this problem. You better start preparing, and you better start telling the people that you care about on how to protect your neurons. Go to my store, get the ubiquinol. It stacks really well with NAD+, resveratrol, C60, clarity factor. Go to my store, the-studio-reykjavik.com. So a great stack here is protect your neurons with the ubiquinol and boost up those energy levels, bring down free radicals, and olive leaf extract to help with your immune system and your cardiovascular system. So please go to my store, the-studio-reykjavik.com, and get the olive leaf extract and the ubiquinol. Use discount 5, you get $5 off any order. You spend $150 or more, you get a free gift until supplies last.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Ideas Valley, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, there's some news on the trade side for the technology industry. The Trump administration has lifted export license requirements for chip design software sales in China as Washington and Beijing implement a trade deal for both countries to ease recent restrictions on critical technologies. What does that all mean for some of these tech players? Let's turn to Neeraj Patel. He's a senior software analyst for Bloomberg Intelligence. He's down there in Princeton. Neeraj, what does that mean for, I don't know, the cadences of the world, the synopsis of the world, the Siemens of the world who need to or would like to sell this technology into China?
Yeah, Paul, this is big news. They have each about low teens exposure to China. As of late May, that new ban was put in place. That was a broad-based ban from the Bureau of Industry and Security that covered all customers in China and all end applications. So a huge lift for these companies, Cadence, Siemens, and Synopsys.
Can you talk to us why these EDA measures are unusual? Because as far as I understand, U.S. officials offered little detail on what was and what wasn't allowed.
Yeah, I think if we walk back a couple of years during the Biden administration, October 2022 to 2023, they had put in place some export controls on chip design software, but that was focused on leading edge. We're talking about the most advanced process geometries, referencing 3 nanometers and below, and that was targeting military usage, hypersonic missiles, autonomous drone operations. And then as we started to migrate towards this type of technology being leveraged in AI, there was more sensitivity by the government on leveraging US chip design software for AI applications. They kept this control restriction in place. I think the most recent one was this negotiation lever. It's an Achilles heel for China players because they do not have a good substitute. They do not have a local ecosystem for chip design software. It's only about 15% from local players, and these 3 players are about 85% of the market in China.
So, Neeraj, what's the feeling within your software world about how this trade environment between U.S. and China might evolve? This is good news, as you mentioned here, for this particular part of the tech stack. You guys expect more easing to occur here?
I do not. I think this is the limit. They put it on temporarily. They took it off as negotiating leverage for probably mineral rights for some other areas. But as it relates to semiconductor software design, this is as much as they're going to push the envelope. I don't think they're going to remove the leading edge process geometry design tools. And the reason why that's so important is in this next era that we're currently experiencing in the early innings of AI infrastructure build out, China is lagging the adoption relative to the US, but these tools are even more essential. There's a lot of different drivers when you do an AI processor today It's going from a 2D planar kind of design to a 3D architecture. That means you're stacking up a lot of different chips and you're gluing them together. You need more intricate design software, and you need a lot more verification on the back end of this design flow before you hand it off to manufacturing. So I think we've reached the limit here.
What about for EDA companies? Because they do have this worry still that even with access to Chinese market restored, customers can still hunt for other suppliers or maybe even further develop domestic capabilities or some such.
Yeah, that's an interesting angle, Isabel. And I think what we're looking at is the ecosystem has lagged really behind software players, and it's even more concentrated in this electronic design automation space. It's not a huge market. It's about 13 billion. And you've had this oligopoly where you've had, 3 players, 85% share. And you think about their work with an Intel or NVIDIA or Broadcom engineers over the last several decades, right? And they're working with Synopsys, Cadence, Siemens tools. And that back and forth is hard to replicate with a new product. You use their EDA chip design to verify an architecture. There's bugs in the tool. The engineers at Intel work with the EDA vendors to remove their bugs. So there's been a lot of back and forth in IP coming from their customer base, which is being even more handicapped now in terms of usage with NVIDIA, Intel, and Broadcom, I see.
Niraj, thanks so much for joining us. Appreciate it. As always, Niraj Patel, Senior Software Analyst, Bloomberg Intelligence down at Princeton. He's one of the analysts I did not hire, but he's pretty good. I mean, usually I kind of, feel like if it wasn't my hire, I mean, why am I talking to this person? But he was good. He's a good, we'll go back to him. But that's a good news for the software developers. If they can get, a little bit of access to that Chinese market, that's a good thing. But I don't think that changes, Isabel, what appears to be a real technology Cold War between the U.S. and China.
That's fair, but the lifting of the curb is a sign that the trade agreement is being implemented and really just could mark a shift in the approach of the U.S. Perhaps, I mean, this China-U.S. trade war has been really going on for quite some time.
All right, coming up is potential to be all kinds of trouble here. A special edition of Bloomberg Markets with Romaine Bostick and Matt Miller, simulcast live on Bloomberg Radio, Bloomberg Television, and Bloomberg Podcast page on YouTube. They got special guest Treasury Secretary Scott Bessent coming in at 1:30 p.m. Wall Street time.
We've never been on before, just the two of us.
What could go wrong there? But I think a lot of positive things could come out of this. So the expectations are high for you guys.
I'm looking forward to it. Romaine hasn't smiled since he came in this morning.
He knows. So anyway, that's coming up in just a moment there. A special edition of Bloomberg Markets coming up. Romaine Bostick and
please go to my store, the-studio-reykjavik.com, and get the heirloom barley. Heirloom barley will bring down inflammation, help to detoxify your body, and soak up free radicals with superoxide dismutase. It's a protein powder. You take a big scooper a day, mix it with soft foods, filter water, smoothie, even with milk, all right? Take it once a day, and it's a great way to detoxify your body and bring down inflammation. I also have C60. C60 is a very potent antioxidant. If you haven't been listening carefully, I am a proponent of antioxidants, all right? The reason why is that they work, right? By soaking up free radicals, you can target lots of different systems in your body. So bringing down inflammation and soaking up free radicals is a major part of anti-aging, right? Slowing down the aging process, boosting up your immune system and improving your endocrine system and helping your other tissues. C60 is a very potent antioxidant. Take a teaspoon a day, preferably on an empty stomach. And what that will do is that you're going to be able to soak up those free radicals at the vascular level, at the cerebral level, at the tissue level. And when you do that, especially at the vascular level, you're reducing oxidized LDL. So you're reducing plaque formation. If you're doing it for in your brain, the neurons, if you use C60, you're soaking up free radicals in the neuron, reducing stress in the neuron, so the neurons are healthier. So you can think better, you have better memory, right? You have better neuroplasticity. especially if you take the holistic approach with proper diet and exercise and learn new things and train your brain, reading and writing and talking to people. All right. C60, you can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. It is cheaper to purchase the higher ounce configuration. Now, C60, you can get it in MCT coconut oil, avocado oil, or extra virgin olive oil. It has to be suspended in an oil for you to properly absorb C60. C60 is the 60 carbon molecule that looks like a soccer ball. It's called a fullerene or a buckyball. And that will soak up hundreds, if not 1,000 times more than vitamin C. It's going to soak up those free radicals, neutralize them. And when you're neutralizing these free radicals at the cellular level, you're reducing stress on the cell so the cell will perform properly. They'll be healthier. The tissues will be healthier. Your mitochondria will be healthier. You'll have more ATP, you'll have more energy. And when you do that on a regular basis, you're slowing down the aging process. You're boosting up your immune system. You're helping your endocrine system. You're helping your neural function. You're helping your vascular system. There's lots of things that are very beneficial when you take C60 on a regular basis. Now, what you'll notice also that you're aging slower, just physically. Just looking in the mirror a year later, you'll notice that you are slowing down the aging process. Now, it works even better when you couple it with bringing down inflammation and boosting up the immune system and revving up your metabolism. That's why I say that my core protocol is the cleanse, the max 14, the max 35 to boost up that immune system. That's the first pillar. The second pillar is the C60 to soak up those free radicals. The third pillar is taking the turmeric, the ashwagandha, and the lignans. That's going to boost up your immune system and help with your vascular system. And taking Boomer Boost to boost up those energy levels and rev up your metabolism. When you do that combo, that stack, especially when you have that foundational items like the multivitamin and the probiotic, those work synergistically for your body. Then you do the proper diet and exercise, the 4 modalities of exercise, resistance training, cardio, stretching, and balancing. All 4 of those modalities are super important. Learn new things. Have some spirituality or some mindfulness that will lower your cortisol levels, that will put you into parasympathetic mode. Drink filtered water, clean your environment, detoxify your body, stay away from processed foods. These things holistically are going, with the proper supplementation, are going to slow down the aging process and get your endocrine system back into homeostasis. So please go to my store, the-studio-reykjavik.com, and get the C60. I've been taking C60 since 2016, every day, teaspoon a day, every day. But like I said, it's synergistic with a lot of other things, like in the core protocol that I just mentioned, but you can also stack it with NAD+, ubiquinol, resveratrol, clarity factor. Those are great stacks with C60. So please go to my store, the-studio-reykjavik.com, get the C60, get it in extra virgin olive oil, avocado oil, or MCT coconut oil, but it has to be in an oil. That's the way you absorb it. It has to be in the oil. If someone says, take C60 in a powder, wrong, wrong. Has to be in an oil. Please go to my store, the-studio-reykjavik.com. You follow what I'm doing, and you're going to slow down the aging process. I'm in my 50s. All right? I'm in my 50s. Alex Jones is younger chronologically than I am. All right? I'm older than Alex Jones. Now, who do you think looks younger? Dr. Paul Cottrell or Alex Jones? Who do you want to trust when it comes to getting healthy? Dr. Paul Cottrell or Alex Jones? The proof is in the pudding. Please go to my store, the-studio-reykjavik.com. Use discount 5. You get $5 off any order. You spend $150 or more, you get a free gift until supplies last. And if you follow my protocol, you're going to get healthy. Please go to my store, the-studio-reykjavik.com. The way to solve the health crisis in the United States and to reduce healthcare costs isn't cancer research, isn't creating more hospitals, isn't minting more nurses, doctors, and PAs. It's the mere fact, all you need to do is look in the mirror, say that you can improve your health by following what I just said. Holistic approach. The 3 biggest chronic diseases in the United States can be solved with what I just said. Diabetes, you can solve that problem. Heart disease, you can solve that problem. Cancer incidences, you can solve that problem by just following what I just said. Please go to my store, the-studio-reykjavik.com, and don't be an Alex Jones. Be a Dr. Paul Cottrell. Thank you for listening and have a nice day.
So, yes.
Okay.